1 minute now until we get the market on open imbalance and the US cash equity open for the day. So the market on open imbalance, S&P 500 buy side of 185 million, Nasdaq 100 buy side 1 million, Dow 30 buy side 37 million, Mag 7 a sell side of just 3 million.
Check 1, 2. All right, sorry about that. I had to check in on Bork. Lovely, lovely Bork. Guy's the backbone of everything we do, believe it or not. Okay, so let's take a look here. So on yesterday's close, right? You know how I felt about yesterday's close. Let's start before that. So I got my oldest daughter graduating high school. She graduates, I believe, on Friday. I think it's at 2 or 3 p.m. And she's got everything, man. She's done it all. And then last night I got done with the stream, and hold on here. Sorry about the 2 streams this morning. I'm having problems again with the stream as usual. Fucking is it that one? There you go. So last night I had my youngest daughter's honor roll program or something for end of school season. And they take it kind of serious because these are your future leaders of America. The school really likes these kids, you know. These are the kids that set the standard for all other kids to live up to. And this, I'd probably take it off right here. If you're long right here, take this off right now. I think this is top. We'll talk more about it here in a minute, but it's possible we could possibly touch a little bit more here, but
the release of the Bank of
we
Canada
should be selling right about there.
expects rates to remain unchanged at 2.75.
Turn that off for a minute.
Voice news disconnected.
So my youngest daughter, she's, you know, track team, first robotics, beaten half the high schools in the state and region. She's got a 4.0 average. Not a 3.5, not a 3.80, 4.0. She's more like me, I think, than maybe her sister, because she's like useless information city. But she's really fucking smart, and she's sporto, and she's like, you know, she's that kid. You know, it's like the kids in school, and you're like, oh God, there's always one. She's one of them. As a matter of fact, the kid in the grade above her and the kid the grade above her that was the overachiever, I'm like, oh, there's that one over there. And I was like, oh, there's the other one over there. And you're like, you can just pick them out. They stand out of a crowd, you know. They're friendly with everybody. They're very intelligent. They're athletic. They got it all. I'm probably fucking doomed. So I did that last night. And of course, she blew my doors off, and she's amazing. And I don't know how. I turned to my wife last night, and I said to her, I said, I don't know how I was like blessed with you being such a great mom. You know? Sorry, I got more crap going on too. We've got like more pollen here. We had a really late start to spring, and now we've got like pollen central. Looks like Stranger Things. That's what my daughter said. Looks like Stranger Things out there. We actually had the top down yesterday, and I'm like, roll it all back up. So when we were yesterday, when we were looking at the close, right? I was like, sideways, and we ramp the bell. And the play for me, at least, was we should do what we did overnight yesterday. And the gamble was because I'm like, well, we're murdering 6,000 Cs. They're either going to fucking do it at the close or they're going to do it overnight. Now, I was also hoping for some down move today, some kind of decent downside move, and said, all right, fuck it, we'll give them until Thursday to get up there and do what they're doing right now. So what did they do? They ramped it. They waited until fucking they literally parked it like resting bitch face spy yesterday. It was hilarious to watch. It was like 6, 7, 8, 9 o'clock, and I'm like, oh, here we fucking go. Like literally no price movement, just parked. And I'm like, oh my God, that's resting bitch face right there. We're gonna do this when no one can profit from it. Yeah, futures you can, but not cash market. So we did that, right? And now we're coming back into that same resistance. And this was our first target, this yellow box right here, which was to hit this yellow box, right? And then reject and then come back to get above 6,000. You guys understand that? We should be failing this right now and pulling back. You know, 600 is right here. I'm kind of open to doing this now. Like now. As long as we don't go through 6,000, I think we're good. Like past 6,000. No, I want to talk to you guys about something here. And every time I come to one of these signposts, I want to talk to you guys about a few things. We could do this. There's a thesis where we could do a grind up, and it's just a slow grind all day long, and it doesn't stop. If you've ever been in a melt up, I don't know how many melt ups you've had recently. Not many, but we just melt, and it doesn't stop, and that is possible. They're a pain in the ass to trade. It's kind of why I like the spread for summertime. Why I like the summer trade is when you look back on it, it's easy. Instead of grinding all the way and constant fear and all this other stuff. What I do want to say to you, though, is we do have some VIX stuff. It's not necessarily cause for concern. We can do VIX up, spot up. And we could actually murder the VIX a little bit more if we want to, which I think would make VIX underpriced, honestly. I'm a believer in some of VIX being, or I believe that, in my view at least, I think, I don't like, so back here on hold on a second here. Back here on May 16th of 2025, we got down to 1432. So I think that's reasonable. I think like or going that low as possible, or somewhere near there. So I think there's more room to go up without spot up, VIX up. Let me just look at this really quick. Yeah, we got a low back here. As a matter of fact, I think we could go as low as 1132 or so, somewhere in there. So there's more room to go before VIX actually starts to ramp. But it could be a melt up type situation. We're likely going to go higher, guys. Now, I don't think we print above 6,000. But I do want to also impress upon you that when we get, so here we are, here's SPX Gamma. I would like to see us fail 6,000. It's right here, the yellow box right here. I'd like to see us fail it, but as we get to these like signposts, one signpost is the prior high. We're already past that, right? So I want to show you a couple signposts here. So the first signpost is right here. This is the prior high, right? That's your first signpost. Just a signpost, not a target, just signpost. 6,000 is probably your second signpost, right? Your third signpost is probably going to be some kind of a failure of 610. Okay, pretend that's 610 right there. And there, within this signpost here, about, so you got 6,000, 610. You've got breaking just above. That means 60250. Sorry for the shitty, my thing's not working right now. It's probably dirty. The gang mouse is a little sloppy. And 608. 50. And I think we picked for the spread 605, right? Well, I shouldn't say think. I know exactly what we picked, but 585, 605. And I kind of when I do these summertime spreads, I'm not really concerned about 620. I'm not really concerned about 610. And 605 is like you got 1, 2, 3, right? So if you're trying to underperform or underestimate and outperform, I think 605 is on the high end of that performance, or over deliver, right? Like under expect, over deliver. I still think this is a little bit on the upside. So as we come into these places, you can get out whenever you want. Don't feel like you have to be. Well, number one, you shouldn't hold the spread to 100%. You'll get assigned or called away. You go too deep in the money. At most 90% of the trade, and then get out. You don't need all of it. And there's another aspect to this too that I haven't spoken to you about. A lot of you don't understand this about spreads. One of the mechanics of a call spread is you usually make about, not always, but oftentimes you'll make about 50% of the trade fast, and then the back end of it is tied into like theta and stuff like that. Not always. You get some call volatility and stuff that'll help, but you'll make most of the trade at the end. So a lot of spread traders, this is for you new spread traders out there, by the way. Old spread traders already know this. But young spread traders probably don't know this, that in the life of a spread, like here to here, oftentimes you'll make like 50% of the money in the first 30% of the life of the spread. If you're doing it right, it'll take you the other 70% to make the rest of the trade. So oftentimes people will get out before then and roll the trade. You don't have to. You should make your own decisions if you're going, same as entering that trade, right? You have to make your own decisions if you're going to take the summer trade. You have to make your own decisions as long as you hold the summer trade. Just make sure that you're out at 90% profit. So that should be before 605. And one of the bigger signposts here, of course, is going to be 6,000. You're going to get a kick up here. When we're slamming into this 6,000, if let's say we fail this, and then we break above the 6,000, you're not going to quite get the kick in the trade here, but you'll get it here. You will get like a ramp in the value of the spread. Do you need to go to 605? Probably not. 602.50 at most. And as a matter of fact, if you want to close out here, you can. It's the summer trade. It's beautiful. You dump a bunch of money. You make some easy free money. And then that gives you the bank that you need for the rest of this season. And whether that extends into late July or first week of July, or it gets cut short this week or next week. It funds you to be a degenerate. And of course, to look for pullbacks or a market roll, all that kind of stuff. And there's something else I want to talk to you about here too. Whenever you're trying to close a spread, if you're in this trade with me, this summer trade, whenever you're trying to close a spread, velocity when you're closing matters. And I don't know how to explain this better to you, but let's say we're coming up and down into a target on your spread. It'll, just as an example, not this example, but as an example, let's say you'll see the spread printing like $900. It'll be like drastic, like 650, it'll remain bid. And then just coming over here, no, I'll explain that better. It'll be like 650 over here. And after you're at bid at 900, it rolls down. It'll be like 650, like right here. The bid's gone, right? So I don't know if I can explain that any better to you. So you oftentimes want to, if you know you're going to be at $900, you put a bid in of, let's say, because each side of the spread, you might not get any buyers. It's bid ask. Nobody wants puts. Nobody wants sold calls. Nobody wants sold or bought puts or sold call puts or whatever. It doesn't matter. Like half your trade won't be able to close, so you have to like bring it in a little bit. So if you can, like, I think we're gonna hit 900, you're kind of asking for like 850. And then as you ping 900, ching, you'll get a close because one side will close easy, the other side will not, unless you're closing legs individually. Or you open the spread individual legs. You can do anything you want, but just note that there's a mechanic in here where you'd be like, oh God, it's $900, bro. I'm supposed to get paid. Oh my God, it's only $650, and I didn't get to close, bro, and now I gotta wait to get back up there again. So just note that there's some funny money when you're trying to close these things. It's an important lesson to learn too. Especially if you don't trade spreads, you want to understand these mechanics that, as you're approaching your target or inflection point, and also when you're on some other mechanics here too. When you go, that's why we always talk zeros and fives. Like if you got 0 and 5, right, you could like reject this and then, not be up there for another week or two. More time in trade, right? More risk. To get where you want to go. So there's like inflection point, then finally you get above, then you get to the 5. So there's time, right? Time is money, right? So there's all these different decisions you need to make. Hey, am I willing to stay in longer? Are conditions deteriorating? Is time deteriorating? Do I have enough time left in front of this to catch less of the trade? All of a sudden you get caught in here and you get roped down to the downside, and like, I could have made 850, now it's only offering me 750. Conditions are deteriorating, I got to get out of the trade. There's a lot of management. Even with a simple call spread, there's a lot of management. If you're paper trading this, you'll encounter some of it, but not all of it. Paper trading is weird. Like your mentality is a little bit different. Your risk tolerance is different. And then you don't get the same open and closing prices that you think you're going to get. It's not like the real thing. So just make sure if you're paper trading, what do you fucking care? If you just close it out or ride it to the end. But if you're trading with real money and this is your first time trading spreads in particular, this is the message to you as a new options trader or a new spread trader, so that you don't have to worry. These are some of the mechanics you got to look forward to. And another thing too here is this. I want you to also not be a hindsight trader. I want you to think about being cut up or getting in at the wrong time of day or taking 3 great trades and then one bad one that blows you up. Your entry into spreads, this is like a taste for you to then grow to the next level. Okay, we're doing these trades. Now we're going to do something better, right? A little bit better trade, a little better trade, a little bit better trade. But it's an entry into the world of spreads, I guess. They're very simple. You can learn the mechanics of the internal mechanics of them. But don't be hindsight trading. Don't be like, oh, Cap called the bottom like fucking 300 points ago. And we went coast to coast, and if I just bought calls, bro, I would have made like 9,000%. That's called hindsight trading. You don't need that in your life. Remember, simplify things. I read an article to you yesterday, I think, or the day before, about climbing the wall of worry and how traders get so fucking bogged down in fear. They get bogged down in what if this and what if that, and they don't take the trade. Caught in this and caught up with that. There are ways for you to make money and to grow as a trader over time and get more comfortable to where you can generate money, which is what you want to do, is generate stable money. Say it again. Generate stable money with more time in your favor, and then be able to go and degen. You can be a hindsight trader with your winnings. Pay your taxes, you can pay your bills, you have breathing room. And so this is all an operation of, this is to turn you into a winning trader. So you won't be doing call spreads in the future with me either. This is your taste or entry into this process of being a successful trader. And we can do these again too. There's a bunch more of these. There's one just like this, or a synthetic long we could do the next time. But there's another one of these trades that comes up in September, October, somewhere in there. You just ride it up into February. And if you can nail 2 of those a year, there's usually like 9 or 12 of them in a bull run. But if you can nail just 2 of them clean every year, it's your gravy train. And if you win, over 5 years, you win 9 out of 10 of them, literally that many, you can always be ahead in this market and never, ever have another problem in this market. Ever. Even if you lose one. And you can go with size. You're just like, bam, 50 grand down, baby. Woo, made 50 grand. Bam, made 50 grand. Do it a second time. You make 100K a year doing that you can spend. So another year passes, then you're doing 100K, and you're making 200K a year. Then you're making 300K a year, 400K a year. So these are really easy, simple, forward ways for you to grow an account. It's a way for you to not have hit the side of a barn kind of a thing. And you don't have to listen to anybody. You don't listen to a goddamn soul. As a matter of fact, next year we can start it sometime in what? Late February to what? Late April, right? Sometime between February and April, we can start the trade even earlier. As a matter of fact, the summer trade is not even the main trade. The main trade is usually February 18th, I think, or the 30th into about April 30th. You can put a summer trade on. And when we take the September, October trade, you know what the best part about that one is? You can wait to get a print on that all the way out to like late February. You could like date it far, far out. You could not get a holiday rally and then catch it in like January. And if you start doing that stuff, you're running with the banks. You're running with the institutions. Even with the death and the doom and the destruction, you're like, hey, I just hit the side of a barn here, right? And you'll catch a print. And you do that stuff and your life changes. You will change. I will change your life, I promise you. I make that promise to you. I will change your life forever. And then you can go off and do your degen shit. You can go like, all right, we're going to do some zero dates. We're going to do like 3-4 good trades. We're going to have one bad one. Then we're going to have 3-4 good trades, one bad one, whatever. So I want you to like think about that as we make our way through this trade. Don't have that hindsight trade. And had I just known, no. You build your bank. And then while we're in these trades, you can take degens or zero dates or weeklies or whatever you want. You know what I mean? So like start at square one, please. It really bothers me deeply seeing that some of you blow up your accounts. I'm blown away by that. I'm like, there's no fucking reason for anyone, even if you're a bear, you can be a bear all day long. Market's going to crash always. There's like, I used to trade just spreads. And it came to a point where I just said, fuck it, I'm just going to do spreads for now on. That's it. was taking like 9 to 12 call spreads a year. And I was taking a roughly 6 put spreads, maybe more, sometimes more, but they never won quite like a call spread did. The market would get irrational longer with put spreads, and we're in that position right now. This market could literally melt up. I don't know that it's gonna, but it could melt up into late July. So like my put spreads were never paid as well as the call spreads. That's why we're doing call spreads now, because they're the easiest ones to make money. And there's better ways to make money even from that. There are even better, easier ways to make even and more money too. And then you layer those trades with other trades. You can layer those trades with flies and condors. We can start trading sideways. Watch out here. I should have said that the market, if you watched over here, the market was going risk off here. Hit that target perfect. Look at that fucking pinstrike right there. USISM services PMI actual 49.9. The forecast was 52, and the previous was 51.6. Some of that was expected, by the way, for services PMI. I should have told you that. I meant to post about it last night, but I didn't on Twitter. I was too busy with my kid. Move that way. Even though the consensus was, or the forecast was 52, it was known that services was weak. Do you know how to know that? I'll explain that too if you want to know. PCE came in light for services. Now, there's some people out there that are screaming bloody murder that PCE means that the Fed is over tightened, and that the Fed is in the wrong, and that we're all fucked. Now, PCE does not include all services, and it's a squiggle in a line. As a matter of fact, the next PCE should be violently to the upside. And so don't put too much, this knee-jerk reaction here, don't put too much credit to it. We can go over it today if you want. I can talk to you about PCE numbers. So that's just a knee-jerk. See it? I'm right back. The real people know that, but of course, Twitter and FinTwit and all the other regards out there, they don't. They're just spinning bullshit to you. I read a guy last night or yesterday or something. This one guy has like, McJohnson in a McAllister investment fund. They were spinning some fucking PCE bullshit yesterday, and I was like, they're like, to get the report, it's only $4.99. And I was like, these fucking guys, they got to be relying upon people being dumb as fuck. Or they're dumb as fuck. I was like, either they're dumb as fuck or they're relying upon you being dumb as fuck. And people buy that shit. And I'm like, these people are, I don't know who the fucking stupid people are. Is it people buying it or is it them? That's even scarier. It's them believing in that shit. You know what I mean? I almost sent him an email. Like I was so perturbed by this yesterday. I was like, I want to send these guys an email and just ask them. Say, I actually know the data. Are you just spinning this to sell newsletters, or do you not realize that what you're writing right here is complete and utter fucking bullshit? I didn't do it. I was going to, but I didn't. Hold on here. Hold on. I got to take a phone call. Hold on here. Hang tighter, guys. I have to take this call. This is a financial stuff for me. Few more minutes there, guys. Sorry about that wait there. Oh, I can't stand these fucking people. All right, apologize for the wait there. I had to take that call. I'm trying to do a. Yeah, I'm not going to tell you I'm trying to do, but. Trying to read what you guys are saying right now. We had our target up here, right? 597, 72. What are you guys saying right here? Did you guys not hear? All right. Let's start at the beginning here. Hold on a second here. What are you guys all talking about? Some of the shit I'm reading right now. You guys are going crazy right now. What's all these, like some of these questions? Well, I guess like come in here and start deleting. No, we didn't have unemployment earlier. You had a revision on unemployment. That was it. Unemployment is on Friday. All right. Is everyone okay? What was the news? What are you guys talking about in here? All right, everybody slow down. I'm reading some of your commentary right now. You guys are insano. All right, let's start at square one. Okay, so we have ready? Today at 10 a.m. 10 a.m. Right? ISM, right? You guys aren't aware that we have ISM at 10 a.m. So you have ISM PMI services, okay? The forecast was 52. The previous was 51.6. It came in light at 49.9. Did you hear me? And was the stream muted? So right here is called a knee-jerk reaction to PC or to ISM services. That's all this is. That's it. Knee-jerk. Risk. What do you mean? Quite the move. I worry about the risk you have on. What are you guys talking about? You got. I'm seeing a lot of comments right now that are making me fucking kind of blowing my mind off, my face off right now. All right, let's start at the top. Let's start at the top here, okay? So, PCE. Easy. Y'all need to be calm the fuck down. All right, so I took a phone call. Did you guys hear me say that? I had to take a phone call. I have a bank calling me. I have to speak to the bank. Let's rewind this a little bit. So we have ISM services at 10 a.m. It's the biggest news of the day. Literally the biggest news. We have some other news today. No, we did not get unemployment today. Okay. Unemployment is on Friday in the morning. There's a whole bunch of like shit we got to talk about here. All right. So unemployment is on Friday. The unemployment numbers that you got today were revisions, I believe. This is not unemployment. I got to say that. Today is not unemployment. The ADP employment change is not unemployment, nor is it employment. Okay? It's like herding cats around here sometimes. Now, this is you heard me earlier say this is called a knee-jerk reaction to light ISM services. Now, slow down here. I literally watched a guy yesterday, a guy was spinning a service for $500 a month, and he was spinning a narrative that the Fed has over-tightened. The Fed is not over-tightened. And not only that, if you had looked at PCE in depth or in more detail, you would know that PCE is going to snap back its next report. And I'll explain that to you in a minute. Not only that, but PCE is not all services either. So like PCE, inflation, ISM services and manufacturing, they all put more or less weight on different things. Some of these reports actually will shift weight. So if, let's say, people are eating beef and they stop eating beef and they then eat pork, some of these reports will include that. Other reports will not. Some reports look good on the surface or bad on the surface, but they really are not bad. Yeah, your zero dates. So here's the targets, right? 59792. Do you see that? There's no person that should be in zero dates on the target of 59792. We already hit the target. I think I told you that earlier. So you shouldn't be in zero dates at 10 a.m. right here. There's no reason or rhyme you would ever be there. We're on target. We already hit the target here, right here. See it right here. Literally a pinstrike. You can see it right here. Here, I'll show it to you. You want to see a pinstrike? You want to see a badass? Right there. See it? That's called a pinstrike. Right there. To the tick. When you hear people say to the tick, there's the to the tick right there. Done. Trade is dead. Now we come into ISM services, right? And we get a move down, right? When Friday comes and we have NFP and unemployment, I would not be in zero dates of any kind, up or down, unless you're willing to let them burn to the ground. I'm being serious. Or it's before the open, but if we had NFP and unemployment in cash markets, you would not want to be long or short. You would want to trade the reaction on that trade. Okay. All right. You shouldn't be in anything. On a 10 a.m. report, you shouldn't be in anything. And especially not after a high tick of our target. If anything, down. Down, 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 down. Okay. All right. Let's get back to on track again. Like, killing me. Guys are killing me. Okay, so let's go back to the trigger full screen here. So we'll go over this one more time, okay? Target 597, right? This is from yesterday. We hit it, right? In the overnight, right here. Ping, hit it. Next target, ready? Failure of 600. right? Remember, inflection point, inflection point, inflection point, inflection point, inflection point. Or, sorry, that looks like weird, but where are we at right now? We're on the half an hour trigger, right? Push that to the side there. I even had the fucking, even had the goddamn arrows in the goddamn screen. Hold on here. Oh. Hang tighter, guys. I gotta talk to the mods really quick. Sell them to me. Getting off track here. I'm not going to take any more phone calls. That's the other thing. I had to call Bork this morning, check on him, make sure he's alive. He's like get the final destination stuff going on in his life right now. What's the yellow box? You see it? There's the yellow box right there. There's the yellow box. There's a little gap up here that needs to be closed. You can see it right here. Little gap right here. Next target is, hold on here. This one right here. Right about there. Oopsie. There's the next yellow box for you right there. Lord Cambuslang, did you make the money on those or no? Yeah, I'm just reading some of the Discord chat, and I'm like, what is going on right now? What is like? Nobody's aware of where we are in the market. Okay, so Now on this ISM services PMI, we got a shit ton to get over. We have a lot to go over today. I'm not gonna lie. I'm not gonna split hairs with you guys. We got a ton of shit to go over today. Did you guys hear everything I had to say about managing the fucking summer trade? Did everybody hear that? Ah, some burring is going on. Well, you might get, there should be like one more. We'll see if we can actually get up here or not. But we want to, I don't know that we're going here, but I want to see it. This is where I should draw it like that, but watch out for a pullback here. They're going to try to send us down one more time here. We literally pin struck this one too. Look, that's a pin strike right there. like perfect fucking pin strike. Bam. And we're on the half-hour trigger. Another place to buy a dip. Like, okay. So we have a lot to get through. Now we have ISM services today, right? Earlier in the week we had PCE, if you recall. We're gonna read through this together really quick and get this out of the way. We have a shit ton of stuff to get over because there's gonna be a lot of like we're coming back into we're gonna be coming back into a lot of bullshit on the internet. A lot of bullshit news, a lot of scam fear, and we got to at least address it so you're aware of it. I was going to put it in a brief, and I was like, nah, better to do it in person. So first thing we're going to talk about here is this. This is about PCE, which is relevant to ISM services. So how financial services, a market plunge. Now, hold on here. We'll go a little bit deeper into this. Let's start at square one. So ISM services PMI is an economic indicator that measures the economic condition and performance of service-based companies in the United States. It is based on surveys sent to purchasing and supply companies of over 400 services firms, providing insights into overall economic condition for the non-manufacturing sector. The index is crucial for understanding the activity level of the services sector and is released monthly. So you basically have goods and services. Fairly simple concept, right? Companies either sell a service or they sell goods or a blend of the two. As a matter of fact, we know that Apple, right, was a hardware company to some extent for a long time, right? And then they turned into a services company, and analysts couldn't wrap their head around that, could they? Hey, we're also going to be doing services now, right? Now, earlier in the week, we got something called PCE. And they're not the same, but there's some overlap and similarities. Now, this could give you some insight into today with ISM services because it's still service-based, or there's some service information in there. It's not all the same, but you want to check the health of services. And whenever I talk to you guys about this, I want you to take this kind of seriously if you can. I fucking love you guys. If this is 1 year, okay. If this is 1 year, okay, that's 1 year. Pretty easy, right? 1 year. And if this is, we got quarters, right? We got Q1, Q2, Q3, right? Q4, right? So you've got a half here, right? What is the half year mark? 6 months, right? 3 months here, 3 months here, right? So you got 3, 6, 9, 1 year, right? Now, typically you'll get a trend that'll start in 3 months. In a month, that's not a trend. So let's say we only know, like, we don't know what this is here yet, right? So we start here, and we're up, we're down, right? We're up, we're down. Right here, we're starting a trend after 3 months. Does that make sense? 3 months have passed. We're up, we're down, we're still on trend. Now we got a major trend, right? 6 months of information, right? And we continue on. It gives us an outlook into the future, right? Now, see that right there? You get a little bit of bad data. And you get what's called a knee-jerk reaction. You can also have moments where you might get one way out and even one way up. These are considered anomalies within a trend over time. You understand? So you've got a trend over time, right? About 3 months begins to show you a trend. And then within that trend, you might get outside of the norm readings. Same thing if you were selling financial services, right? If I was JPM and I said, hey, you know, we did great for 9 months. We had 2 anomalies or 3 anomalies, but otherwise we're, you know, on trend making you money. Does that make sense? So when we have these outliers, what you'll get is, especially on a small time frame, you'll get nefarious individuals. Nefarious. And talking points for Ohm and Book. Oh, bro, look at that. You know, we're going up, bro. We're going to break out. Or, oh, bro, look, we're breaking down right now. Oh, my God, we're going to crash, bro. That's usually on like month-to-month reports. And these people, these nefarious individuals, bank on you. They bank on you and your fear, your irrational fear. It's the same thing with like when we had inflation. It was one of my favorite ones to look at. Like we had ramping inflation, right? We got the Fed telling you we're going to hike, right? Matter of fact, when we're up here, the market was going down, right? Actually front running down. Started actually rolling before. Stop the velocity of inflation. Make sense? Actually, we're not there yet. Still like right there. Like right there. But the intent was to slow the rate of deflation. So it was like slam, 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 slow the rate of deflation. Kind of why you're not getting a cut right now. You want to see if inflation goes up or begins to go through, anything like that to ease before he cuts. So it has an impact on the market. So, just so you guys can see that. When you're reading from other people out there, like when they're spinning bullshit to you, they don't think you know that. And you might not. I'm going to bet that most people don't. Because some of the shit that I read, I'm like, oh God, I want to drill my eyeballs out with some of the shit that people spew. And this isn't like some rando with 100 followers on FinTwit. This is like McGlintock and Matthews, investment fund. And you, of course, like, well, Mitchell's and Sons, they sound like they're respectable. Or Bloomberg, shit you not. WAPO, you name it, man. It doesn't, like, I see it everywhere. It's shocking to me. And I realize that's probably an editor saying this is the sizzle that we want, right? We got to sell newspapers. But you as a trader need to be able to, at some point, understand that just because they're writing it doesn't make it true. It's meant to sell newspapers. That's what it's there for. Now, I'm going to read this to this PCE, which is not exactly ISM services, but I want you to understand that we've got goods and services. And PCE, which was released the other day, is an economic by the Bureau of Economic Analysis, was benign. Benign. The overall PCE price index and the core PCE price index barely ticked up on a month-on-month basis, and on a year-over-year basis decelerated further towards the Fed's 2% target. And that's nice. But why? And the answer is not nice. Two very unusual things happened. One has never, to that extent, happened before in the data going back to 1960. Watch this closely here. This is this move right here. My charts look like crap here. Another note here, too. We did fail this high back here, but we did beat this one. So we're still alive right now. Still alive right now. Now, one has never to that extent happened since before in the data going back to 1960. And the other hasn't happened to that extent since the market crash in 2020. So immediately, you know that the news is going to pick up on this, specifically PCE. And that's what I had read yesterday was this company, this financial services company saying, Jerome is over tightened. We're at risk of doom and gloom. Now, which pushed down core services PCE price index, the core PCE price index, and the overall PCE price index. What's not nice is that we know that those two components will snap back violently. The PCE index tracks not only goods and services that are included in the CPI, but also other categories that consumers don't pay for directly, such as many financial services. And it tracks many of these components not by observing transaction prices, but by imputing price levels from other data, including financial markets. The PCE price index for financial services with its imputed prices, that if you guys know what imputed means, it's like going down. Imputed prices that consumers don't pay for directly was one of the two stars of the show today. The financial services PCE price index, which features heavily in core services, plunged month to month by 1.69%, minus 18.6 annualized in April, by far the biggest drop since April of 2020, when it plunged even more based on the values it imputed from the crash of the financial markets at that time. What just happened? What just happened? We just went down 20%, didn't we? So you literally got a company out there right now. I'm not going to give you the name of this. Maybe I will show you later. So last time we had this bad data was in March of 2020. And the data came out just after that big down move. And what did we just have? A big down move. So you're going to expect PCE to be violently to the downside in this report. And we also know some things, or we can infer some things here. We can infer that the next report should spike higher. We should also expect some help from the Fed or from the Treasury Department, Bessent, or even Fed Chair Powell. We already know it's Bessent doing it right now. He's doing like a QE light right now. But here's the chart right here. Here's the bad read. And you can see, boom, we ripped higher thereafter. We have an example of ripping higher thereafter. And PCE tends to do that anyways. So it does not make a trend, nor does this ISM services make a trend either. So these are financial services, many of which consumers don't pay for directly, and much of it is imputed from other data. For example, the imputed value of banking services to deposit holders is calculated based on factors like interest rates and the volume of deposits. It includes fees and commissions at banks, brokers, funds, portfolio management, etc. It includes financial services furnished without payments for which imputed values are used. It includes services provided by pension plans, commercial banks, and credit unions, regulated investment companies, portfolio management, investment advice firms, trust, fiduciary, and custody activities. Some of the sources from which values are imputed are FDIC data, PPI data, data from stock exchanges and markets. To impute in the values for the components for portfolio management and investment advice services, for example, various government data, etc. And this financial services PCE price index is hugely volatile. Some of it's related to sharp movements in the financial markets. Echo. As in April 2020 and in April 25, it will snap back. The Fed knows this. Remember, we've got a Fed meeting coming up. And Powell has occasionally mentioned the financial services component when it acts up in one or the other direction. And he might mention it again in his next Fed meeting. Another hero, recreation services PCE price index plunged month to month by 0.73%, the biggest plunge in the entire history of the data going back to 1960. So this was another huge outlier. Now, this isn't ISM services, but it's in the field, isn't it? It's not goods, it's services. It has nothing to do with foreigners not coming to the U.S. suddenly. Listen to that closely. It has nothing to do with foreigners not coming to the U.S. suddenly or whatever. Recreation services does not include lodging nor airfares. So I want you to think about all of the fucking grift and psyops and astroturfing and garbage that you hear spewed. The index, though, does include some key things. It does include cable and satellite services, broadband, amusement parks, campgrounds, concerts, spectator sports, movies, theaters, gambling, video streaming, vet services, package tours, memberships, clubs, participant sports centers, museums, maintenance, and repair of recreational and sports equipment. Well, I can speak to some of this. Maybe it is only my own experience, but I was just at a couple museums recently, and it was quiet. It really was. Do many people go to museums anymore? I don't know. I think people's consumption habits are changing, though. Do many people go camping anymore? I don't know. Maybe older people, but younger people tend not to go to campgrounds, do they? How about concerts and spectator sports? I went to a Chicago Cubs game recently, and they wanted me to pay $20 service fee. So I was buying bleachers. I think they were $30 each. The service fee was $20 to do it on the internet. I was shocked. I was like, yeah, $20 for 6 tickets is fine, but not $20 per ticket. So I asked, can I not pay the fee some other way? And they said, if you show up to the box office, you can buy the seats. I'm going to tell you right now, if I couldn't buy those seats in person, I would have fucking revolted and not paid. I was not going to pay $50 for bleacher seats with a $20 fucking service fee per ticket. And as far as concerts go, I do go to go to EDM festivals and stuff, but I did just cancel one. The fees were ridiculous, and the prices were ridiculous. I canceled one Bonnaroo, and I canceled another one, Electric Forest, recently. I was unwilling to pay the amount of money they were asking me to put out. It was in the tens of thousands of dollars when I was done. So I can understand that. This reminds me right now, too, of McDonald's and their report they just put out. If you just listened to the McDonald's ER report, you know what that CEO is doing? He was fucking lying to you. He was fucking lying to you. He was telling you in that ER that consumers are scared. The consumer's not well off and they're scared. Oh, and by the way, our wealthy consumers are still buying. Consumers are not scared. Your product sucks. And it costs too much for what you're given. And no one's buying the bullshit. And to boot, you have new competitors out there that are competing with you at that price point. Like Culver's. Keep bringing Culver's up, but it's true. And this is actually how we come back to, do you pay for tariffs or not? And the answer is no, unless you have the money to do it. What you do is you revolt. You say, fuck you, I ain't eating McDonald's. I'm going to make my own burgers at home. Or I can get a steak at Aldi for $10. Or I can go to Culver's and get a better deal. I talked to my friends about it. Well, what about using the app? Fuck the app. Then you'll see. Matter of fact, there's a burrito company in California right now. Whenever it goes public, mark my words, Chipotle going bankrupt. Mark my words. That's the next one on the block. Chipotle gone. They're gone. They have a competitor right now. I forget their name, what they're called. I'll look them up. But there's a competitor. There's like a bunch of people standing behind the back line. They're loading up big fat burritos. You ask for more rice, they're giving them to you. There's a competitor. Now, these CEOs and these companies will attempt to pass along costs to you in tariffs. And you think that you're going to accept it, but you're not. Now, the consumer was much better off last year and the year before. Matter of fact, out of COVID, you guys were, watch out here. This is a sell. We failed this. That's a failure right there. We're going down, boys. Woohoo! Finally. Come on down, baby. A little bit of a breather here. So, when I read like Reddit, it is the biggest diarrhea I've ever read in my life right now. And I'm a Democrat. When I read that shit, it just like blows my mind. It's like economics 101. It's not even politics, it's economics. It's literally like you're regurgitating what a CEO is telling you to regurgitate. The CEO, you're giving the corporate speak of America, and you don't even know it. Oh, we're going to eat these tariffs. No, you're not. You're going to refuse to pay them, and they will take your money as best they can, even if they go bankrupt. We've seen it with other companies. Kmart, Howard Johnson's, GE. The list of companies goes on and on and on and on and on. Don't believe some CEO like the McDonald's CEO telling you that people are scared. They're not scared. Spend their money somewhere else. And you'll see that as this economy changes. People are going to say, no, I'm fed up with this. No, not paying it. And it'll also provide opportunity for new companies to come on the scene and say, hey, guess what? I can do a better cheeseburger. It might not be cheaper. I'm still greedy. But it's going to be a better damn cheeseburger. You want to try it? And if you say, yeah, great, I'm doing good. I'm a consumer. I'm doing good, even though there's loud voices on Reddit saying that they're not doing good, but actually I am, so I'm not complaining on Reddit. That one loud voice is, but we know that you can afford it. Now, there'll be a time when you might not be able to afford it, and guess what those people do? They'll lower prices. You'll see them lower prices. You'll even sometimes see smart companies lower those prices and not show profit while times are bad or the consumer is not well off. Just so happens right now you're still kind of good. The hard data says that if you were like, let's say I think you're pretty much the best you've ever been off in history before this new tariff 2.0 thing, believe it or not. They likely knew you could absorb some of this. If you were a 10, you're probably like a 6 or a 7, and a 5 is good. I think a 6 or a 7 even now. We can see that in what numbers? Jobs, job openings, unemployments, employments. We can see it already. Companies are saying, I'm having a hard time finding qualified employees. That's good for you. That means your wages can go up even if inflation goes up. Means they'll have to pay you more. Maybe not wage spiral, but the data looks good right now. And this includes ISM services. Now, we also know that it too will snap back by just looking at this crazy chart of month-to-month changes in recreational services. Look at these peaks here. This is month-to-month. Look at the wild-ass swings in recreation services. It swings wildly. You as a consumer do not give yourself enough credit. I'm shocked at how we consume things today. I realize that people hate paying more money, but are you worse off? And you don't speak. The people that do speak are worse off. They complain. They're always complaining. And people that don't like to pay higher prices complain too. Oh, please go down a little bit. Just go down. Just cool it off just a little bit. Come on down just a little bit. Come on down just a little bit. Cool it off just a little bit, baby. Just cool it off a little bit. If you can bring it down here, we can buy a dip. Should probably draw this better. It shouldn't have been so. It's not that evil. It's not going to go down like that. It's not. It's going to go down like this first. It'll be a grind here. So give yourselves more credit. You might have an anecdotal piece of information like, well, I'm not doing well, Cap. That's okay. But if you read the data, you have to admit that it's not for everybody else. It's important for you to separate your Main Street hat from your stock market hat, your economy hat, your Econ 101 hat, and recognize what's really going on, even if you disagree with it, even if you're having a bad day or a bad month or a bad year. As a matter of fact, if you recognize it, you can actually use this information to your advantage so that you get ahead in life. If you can see people are jumping from job to job, or their wages are going up and yours not, or the ask on a house rental or a home rental is going down, yet you're paying more and you know you can make a jump at this time period, you should do it. You can actually tell when you can sell a car used, or you should be buying a car used by most of this data. This can help you in life. We don't teach economics, basic economics. Oh, we got a reversal again. We're going sideways. We do not teach basic economics anymore. Kids don't learn it. Economics in a grade school is what? Learn how to sew? You need to learn this stuff, even if it's just basic shit, because this will help you be a better adult. Hey, is it time to buy a house? Is it not time to buy a house? Are home prices cheap? Are they expensive? Are rentals cheap? Are they expensive? What's the difference between the ask and the get? Are some places literally pumping market prices? Right? Hey, well, they're asking too much money, Cap. Did you ever ask them for a discount? No, Cap. I would never even think to do that. New high right here. Trading sideways, grinding. This looks like a flat correction, not a sharp correction, boys and girls. So you guys need to understand this stuff instead of reading the crazy town that's out there. Oh, oof, that looks bad. Market should crash. Stay away from that noise, especially when it's month to month. And note that you need 2 or 3 months of data. Note that data swings up and down. And even notice here with this ISM print, it didn't change the direction of the stock market, did it? This morning on Twitter, I posted another thing. I wrote, "What's up with order 899, Cap?" And I wrote, it's GS selling another product. And I did a response that said, "Are you sure, Cap?" And I said, "Gah. There's more fuel in the fire for doom." Now, this data is real. Section 899 of the BBB, the Big Beautiful Bill, is a nightmare. It really is. But will it be in the bill? Probably not. So if you're wondering about that this morning, or I saw it finally got picked up by the wire service. It's very unlikely that 899 is in that bill in its final form that's voted on. If it was in that bill, and you see that it's in the bill when the bill is being finally voted on, you'll probably get the bond vigilantes out and they will freak the fuck out. But we're not there yet. And we're not at the votes at this moment. And I'm sure that a gray suit is going to show up in a back room and say, "No fucking way." So if you're wondering about that, order 899 or whatever, that is only to sell 2 different indexes from GS and to stir fear in you. Now, if it is in the bill when it goes for a vote, and the gray suits that didn't listen to the gray suits, we'll deal with that when we get to it. If they do pass that bill, yes, you're going to have, or we're going to have a bad time. But it's not something that you can price in today. And we can discuss it more in detail later, how it fucks with capital funds and markets, capital markets across the world, and the bond market in the U.S., the retaliatory nature of it. But it's not for this morning. If you want, I'll write it in a brief for you and simplify it for you. But it's not something where they're going to crash the market today. We're going to have bond vigilantes out today. They're likely going to send an emissary and say, "You're out of your fucking mind. You're not doing this." So for now, don't pay too much attention to that new piece of, it's not quite FUD, but it's meant to scare. Look at that grind sideways. Okay, so if you hear I saw it in the news. I haven't said anything about it the past couple days, and then it hit the wire this morning. So I'm like, oh Christ, here they're already out here trying to scare people. Like, don't worry about it yet. It's not something that should be on your table. You're not going to wake up tomorrow morning and you're going to see fucking bond vigilantes out there and the market's going to zero. And it's not happening like that. I'm going to put it like, I'm going to give it like a 90%, I'm going to give it 70% chance that that shit is not in the final fucking bill. Like, I would say 90, but I'll give 70. No fucking way. They're out of their fucking skull if they think that's in the bill. But it does make for nice what? Steak, right? A little bit of sizzle, a little bit of fear, a little bit of doom. There's no way. There's like absolutely no fucking way that that's going into the bill, because it's like the ability to literally shut down capital flows of money back and forth in it starts with corporate debt bonds in multinational companies. You would literally it would be like another country shutting down Amazon, Walmart, fucking Tesla, Apple in like a stroke of a pen. On the inverse. And then of course we would retaliate against another country, right, with not buying their corporate or their debt bonds. And that shit leads to like World War III. It ain't ever fucking happening. Trust me. It is never, ever happening. If it wasn't the big beautiful bill, we got a problem. We got a problem with our elected officials. I don't think Elon has addressed that side of it yet. He's more concerned with the deficit, I think. But you know, we know they like to spend, right? Come on, we all know that they're all fucking power money grabbing whores, right? You guys know that, right? Like all of them. They like to spend, man. You call themselves whatever they want. And if you're a bull and you take your Main Street, you might be like, "Well, Cap, I don't like the deficit." You take your Main Street cap off. You need deficit for the market to go higher. Do you know that? You can bitch and moan about it, but don't bitch and moan about it if you're a bull. You need higher deficits. That's how the markets go higher. Cap, can we start, say, a small account for selling options next year? You can do it right now. If you're making money right now in this trade, I would say buy Ford. I think Ford tracks the S&P 500 pretty well. It's meme-ish, and I think it's a highly traded stock. It's one of my favorites for like a low money account. Buy yourself 100 shares of Ford. And then we can start selling options against it. You can follow, I think it pretty much follows SP 500. It's got some of the OI. It's one of the most traded stocks out there to this day, or option-wise. What's that? Hey, you know what? If you disagree with me, dude, you wouldn't. I'm gonna blow your mind. Like I got figures, man, that'll blow your fucking face off. I got figures that'll blow your face off. And if you don't believe me, just go through Wolf Richter and spew that bullshit there. Like seriously, go there and see what he tells you. He'll just show you the numbers. Like the only thing that can tell you is that the bottom end of people are worse off than they've ever been. But that the number of people in that group is very, very small. Most, I think the median income right now is $60,000. Median. That's the median right now. That's right. That's pretty good. Nope. See, you're mixing data that doesn't matter to the stock market. I'm telling you, don't believe me. Everything you're saying right now, I want you to go into Wolf Richter and spew that bullshit there, and he'll just rip on you. And he'll just show you the actual data. I'm telling you. You guys are literally consuming astroturfing and sentiment from like one person, or let me ask you from a different perspective. I can say it a different way for you. So, if you're well off, are you going to go to Reddit and bitch? Say it to you that way. Put it to you that way. Fuck no. Everybody's going to Reddit if they're well off and bitching. So you only hear those people that are in that place. So it's not a reliable source of information. You understand that? Do you understand that at all? So if a topic comes up like, let's say, cancer, you're going to get everybody that's involved in cancer commenting, right? Hey, my mom died, my dad died, my sister died, I've got cancer, I just recovered from cancer. But it doesn't include people that don't have it, right? So you're getting like a snapshot of it concerns me. You're not getting anyone else in there bitching and moaning, or like if I'm bitching like, hey, I don't make enough money, right? And some other guy comes in and says, me too, man. I'm getting squeezed out. I'm not making enough money. I'm getting fucked here. I got a degree and I'm still not making any money, right? We're all bitching. You're not going to get some other person that comes in and says, well, I'm doing great. They're not going to say a word to you. Not in public. And you need to be aware of that. Like, have that self-awareness. You're not going to see that voice. And then you don't know who's amplifying that either. Like, who's going to amplify that story? If I write a story and post it, and then I want it to gain traction, right? Or I've got a motivation, either I'm a state actor or a company, or even just the original writer of that article. I want traction in that, right? I want eyes on it, reading it, fear. I want your emotions to be pulled at. It's just not what the data says. I'm sorry. And it's horrible to say. And you need to understand that too, because when the data does get bad, you need to be aware of it. You can't sit here and like scream about it for years and it doesn't matter. And then when it really does matter, you're not aware of it then either. You know what I mean by that? When it does matter, you better be aware of it. Or you're going to blow up your account the entire way down the road. Right? And then when it actually does matter, what do you say? Like, oh, look, I was right 5-10 years later? That's insano. It's the definition of insanity. Buyers coming back and successfully buying now, grinding sideways and up. Buyers trying to trade up now into 598.20. I recommend for you, I have no affiliation with Wolf Richter. I recommend that you please begin to read that guy's posts and the commentary that he has within his blog posts. And if you ever want to bounce off your ideas of what is what, or what's real and fake and bullshit, or anything you consume out there, I invite you to do it so that he can show you that you're wrong. With the actual data, with facts, what is used by who? It's used by who? The Fed, the Treasury, our elected officials. They use that data, the hard data. That's what they do. Even if they change it, even if they alter it, the market will adjust to that alteration. Yeah, me too, Binky. They didn't get the down move, did they? They didn't get the 1030 down move, did they? They failed. They failed at 10. No, they didn't fail there. I guess they kind of were. That was pretty good. They tried again and failed. And now, this is the end of the day for somebody, isn't it? The end of the day for the Europeans. They're looking for the pump now, aren't they? They got the slam down. Looks like 4 p.m. for the U.S., doesn't it? Yeah, no, I'm with you on that. I think you should bitch and moan on Reddit. I think that's okay. I think it's fine to go to Reddit and bitch and moan and be like, yeah, you know what? This sucks and that sucks. But don't let it infect your trading. You see the difference? Like, hey, you know what? Fuck this and fuck that, and I hate this, and that's wrong. Whatever you do, don't be like, oh shit, the market's going to crash because how I feel. That's the difference. And I think that's like, take your trader hat off, put your Main Street hat on, take your Main Street hat off, put your trader hat back on. Hold on a second here. You understand the difference? You got to. That's how people blow up their shit, right? Market's going to crash. Everything's horrible. You know, or even if you're well off and you hate inflation, you ever notice how politicians always want to assign inflation? Doesn't matter who they are. It was their markets. It was their inflation. Their fault. It's their fault. It's their fault. Because people hate it. No one wants to pay inflation. Even when they're well off, they don't want to pay it. That's looking sexy right there, isn't it? Looking for that little pumperoonie so they can check out at 11:30, huh? Want that little bit of sweet nothings into the close, don't they, Pinky? Woo. We still rotating here? Now, they took the money and ran on Goog, huh? 169.58. And then sold that shit like it was nobody's business at 10 a.m. 9:37, they got out. Hang tight, guys. Oh. 6, 7, 8, 9. Could we do 9? Well, Goog's trying to come back right now. Tesla, 15-minute. Oh, God. I don't know if I want to buy Tesla here. Maybe. Let's see where the rotation is right now. Microsoft's looking sexy as fuck right now. Goog, Tesla, Misfit, Apple. Apple grinding into their event. Apple looking good. Are you guys getting out before the Apple event on Monday? Nvidia still looking beautiful. Should we do Avgo? Yeah, we'll do Avgo. Broadcom. On here. God, Meta just keeps out fucking performing, dude. Meta's gonna crank right in July. It's gonna keep going up. It's not gonna be done. It's not non-fucking stop. Look at it. It's like a pig. Amazon. Amazon's still dogging. No, Amazon's a little doggy this morning. Amazon's looking pretty fucking weak right now. Fingers are hurting really bad. I got them all there. Hang tight, guys. I keep getting pinged for TEM for Tempest. Dude, VG just keeps running. KGS. A-Lab's still running. I'm gonna put some stocks that I still like inside the Discord. We got some changes coming too right now. That's how we do stock picking around these parts. I'm gonna post some charts here. We're gonna start doing charts every day. Tighter, guys. No. Why am I still showing? Why am I still rotating? Why are we still rotating stocks here? I'm getting tons of alerts for TEM, Tempest. They just keep going up and up and up. There's TEM. Check this really quick. Hold on there. There you go, Pro Trader. KGS. Wherever. Yet to beat that one. 1, 2, 3, 1, 2, 3. August. Quick second here, guys. taking another stab at it now that we're at 11:30. KGS A Lab. KGS A Lab. There's A Lab VG. Hang tight, guys. Yeah, that might be wrong. I don't like that one. What is that? 1, 2, 3. Somewhere up there. I think it is. There's VG. I'm posting all these in the Discord right now. ASPI. The Topes, baby. Come on. There's ASPI. Dude, ASPI trading $6. That's a fucking 300%er. $20. God damn. That shit's gonna ramp. It's a long trade right there, that ASPI one. Yeah, that's a long trade. Anything that's like nuclear is a long trade. If you look at that, if you look inside the pro channel, if you look inside the pro chat, that last one, ASPI, that's a long-term hold. Down here. Like buy it and don't look at it. Sell puts against it over time. Still grinding higher right now, not losing anything. It's a long-term hold. Give me like 1 second. I gotta go pee-pee really quick. Hold on a second here, guys. ASPI is like put your pants up, spy. I don't know if you need to hit that now. I got the new high there. That's a really fucking long-term hold right there. You know, that could be. Yeah, I just think that's a buy and hold. IE. You bought 50 back in April? Which one? Nice. Yeah, I like that one. I like that one a lot. Huh? Here. Sorry, I'm like bouncing around here with the Discord and with charts for pro traders. 100%. It was used for, they were dated, or they're for arbitrage. That's right, with a stare down larger events. Abso-fucking-lutely. 45's got that absolutely correct. Yeah, what you can do is, all right, I'm going to stop posting charts really quick. What you can do is, so if you think that there's volatility along the way in this trade, right, which you're going to expect some of it, right? We know that we've got headline risk, tweet risk. It's not really Trump's fault. The market, he just, market picked up on it. They trade against Trump tweets, right? Say what it is, right? We know we have got volatility because where's the bottom of VIX 30-day and VIX 9-day, right? So we already know there's volatility, right? VIX can tell you that, right? You guys understand that? So if you look at VIX bottoms, are we trading a VIX bottom right now of $7 or $8 or $9? The answer is no. So you have elevated volatility events, right? You should expect that. Your take is that June has some quite volatile events. We all agree on that, I think. So if you wanted to earn, you'd want to be earning Vega on that. Yes, you could just earn volatility within options. So if you think, if your thesis for the summer trade is we're going to hit some volatility, or even if not, let me show you, express this, make the do this simply for you. So what spot up and vol up looks like is it's like the summer trade can be different things to different people, right? I think we've talked about this a lot, but so let's say, so here's a SPY, right? Is this SPY? I think it is, yeah. Okay, so let's go here. We can make this very simple. Extremely simple. You know that I know, and if you don't know, I'm going to tell you that, like, so VIX is volatility and also fear, right? Whether we have unrealized or realized volatility is two different things. But let's say you have expected seasonal weakness. Let's say it starts the 20th of June, right? And let's also make a couple other presumptions here. We'll say the first week of July, right? Because of how it falls in the calendar, right? Look at the 30th is a Monday, so we'll do Friday over here. That's the 11th, right? So you get the 11th, the 20th. Right. So if you wanted to express like a volatility trade, you said your June's got some quite volatile events. It's not the only volatility, believe it or not. You also have seasonal weakness. So let's say that starts halfway through July 15th. Right there. And let's also account for if we were to squeeze up into the 31st. Let's go like let's go balls deep in volatility, right? So this is where the volatility comes from. Ready? Hold on here. Let me mute some of this stuff over here. Main camera. Webcam frame. Just move all this down over here for a minute. Apologize for this, but okay. So you know how traders are, right? Traders, hold on. Traders are always fearful, aren't they? They're afraid. They're not going to tell you, but I'm going to tell you they're afraid of this. They're afraid of that. They're afraid of volatile events, right? They're afraid of seasonality. right? They're afraid of headline risk. You got a Fed meeting. Actually, it's over here. You got a Fed meeting, of expiration, quarterly OPEX, month end. Lots of volatility, right? Lots of opportunity for what? Failure. Just a few days ago, right? A few days ago, you were told that this was a diamond, right? And that we were going to break down, right? Right? Volatility, right? And there are going to be moments where you get FOMO, but there's moments of volatility within here as well. So let's say puts are cheap or expensive or cheap or whatever, or calls are cheap, which right now calls are actually cheap, aren't they? Puts are expensive, so everybody's buying dips, right? Driving us up. But let's say we get up here, and you're going to get more volatility, right? More value in puts, right? So if you look at calendar spread, let's say we roll, right? So you would see what? Puts begin to increase in value. And if we actually get the roll, they would continue to go up in value, wouldn't they, as volatility ramped? Now, let's say we go higher, though. You're going to get more volatility, right? So we go up there. Let's go ahead and go crazy up here. The higher we go, the higher volatility goes, right? And then you'd capture the back end in September, right? So your volatility would actually ramp, right? So your puts would increase in value, increase in value, increase in value, and then as we're rolling, they increase even more. So that this kind of expresses a put calendar spread with farther out in time. You don't know when it's going to roll here, 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 or here. Put enough time on a calendar spread, and you're going to capture that volatility. As a matter of fact, that calendar spread should like increase and decrease along the way. And you're either going to get a print here. As a matter of fact, even if you had 590 right here, just the volatility within calls and puts or whatever, however you're expressing it, you should be able to capture that trade. You actually don't even need the market to go down. There'll be moments where you can still close the trade and capture the vol on the put side. Now, puts are bid right now. It's already began. We're a little bit late to be doing this. To be putting this trade on, I like the trade lower over here. But if you begin to see puts get cheap again, or you expect us to go up and grind this up and down, you could probably still catch on the back end of the trade just by interest and option interest in puts, right? So you buy them way out in time here, December or March or something. You can open the trade over here and try to capture the volatility into what? September, October, right? Capture that whole trade if you wanted to into end of year. Does that make sense? Puts bid. Oh my God, we broke down. You're actually price ambiguous. You really don't care. You really don't care about this part of the trade. Care about that side. You're catching it cheap and then paying it off later. There's a whole bunch of different ways for you to do this summer trade. What I like about the summer trade is like you see this price action right here. Look at this price action right here. You're more than likely going to see this in the month of July. We're breaking out, we're breaking down, we're breaking out, we're breaking down. So if we get into this like the summer trade, they call it the summer doldrums. You have like moments of sideways, squeeze up, moments of sideways, squeeze up. Part of the trade, you had two opportunities to put the trade on. The first opportunity was, in my view, the best opportunity was here and here. The best opportunity was somewhere in here. This is May 23rd. Oh, well, actually, April was the best opportunity, April 30th. But you had another opportunity here. You have another opportunity right here. 2 opportunities, actually. As a matter of fact, this is the Friday opportunity. This is where we put it on again. We were like, yeah, let's sell in a month, right? So how the market moves, right? I think we talk about this pretty frequently. How the market moves from month to month and quarter to quarter. So you're looking for what? Ready? We are exiting our longs right here. Right? Exiting longs. Putting a hedge on, right? Whew, get paid. Notice end of month. New flows come in, right? Yahoo, let's buy. You actually get another opportunity here and here. And we're looking for what? Some kind of a payoff where? Where? Up in here, right? Get sucked down for quarter end, right? Or I don't know. Wait a minute. I'm doing that wrong. Where's end of month? This is the end of month right here. This is when we think volatility is coming in somewhere in here, right? Up, 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 right? Or even down and up, right? We get what? Fed meeting. We didn't have deals with these countries. We're ruining their lives. Everything's awful. The expiration, DivX, right? Come down to the 30th. Makes sense. Same plan as over here. Same plan as over there. Right? Whipsaw, whipsaw. You might get one more opportunity. You may get one more for July. So there's the 30th. There's the 18th. There's potential for, rolling down and then up. But you have to limit your expectations in here. Would be the only thing I would say to you would be you limit your expectations. So it's like a slow grind up. You get moments of bursts. And even if we roll this way, there's 605, right? So we roll up into, you see it now? The 18th, right? 18th of June. Down, right? Up, right? Exiting longs as we get closer and closer. Sideways. Down. Make sense? So you're down here trying to capture this trade. Do I care if we roll down right now? Yeah, you can. You can be like, hey, I'm doing my thesis is we crash. We're going to start crashing on the 20th. We're going to crash on Trump crap or, whatever the fuck it is you come up with. Jerome Powell's going to ruin everything. But you're running with the cycles of the market. You're reining in your expectations because it is summer. Your most productive months are typically back here. Getting long in April, late February, late April. And what are your next most productive months? Typically what? Come back up in here in July, right? Tell us no into September. We get our most productive months typically from late September 30th, somewhere there, October, November, and you're buying for a late February print, but you might get the print on Jan 1, December 31st. And these are your next most productive months. It's like the summer trade ends up turning into this big kind of, depending on who you are as a trader too, you know this, right? You get this over here, down here, right? Maybe you get, where's June? There's the 30th. Maybe you get up one more time up here, right? So we're still sideways, aren't we? There's literally people that are trading from down here like a fucking fly. or widening a condor. Oh, yeah, we're going to capture all that. We're going to capture all that. Oh, by the way, I'm going to sell a bunch of calls at 620, 630 then, right? Bunch of suckers think we're going below 564. And you see how like we're like rolling into this, right? September, bigger move here, right? Wham, wham, wham. You'll also, if we squeeze up here, so we squeeze up in late July, woohoo! It's all, you'll hear people on socials say it's all coming back, bro, and they're usually right most of the time. They don't. Notice how as we come into these highs, you know who's selling here too? Show it to you this way, a better way. So here's an hourly thing right here, right? So when you hear things like CTAs or sellers in all scenarios, people are like, oh God, I'm scared right here, right? No, it's that as we hit these peaks, right? As we hit these peaks, right? Yeah, they're going to take the money and run. It's not bearish. It's they're taking the money and running and looking for new lows to buy, right? It's not bearish like, oh God, CTAs or sellers in all scenarios go to zero. They're trying to take profit up here. Trend followers. Right? It's like when you're talking about the summer trade, it's like, it's sideways and up, and then we roll. Oh, you're saying we're going to squeeze up for, July maybe? We're going to break above all-time highs, go vertical? Sure, we can probably capture every single one of those outcomes in a trade. Doom right now. Hourly trigger right here. Can we get 88, please? Bomb us down to 88. I so bad want to get to 88. It's not even funny. That right there. We should get a bounce right here, by the way. I think I put that on Discord or Twitter this morning. I was like, can we get 88, please? We come into major inflection points. That would be what? Zeros and fives. I know. I think it's gonna take us to get there like NFP on Friday. I think it's gonna take like today, tomorrow, and then more the morning of. I think the last little bit will be like the dive down in. We all know that's unrealized volatility, right? If you want to know what I think is going to happen on unemployment and employment and non-farm payroll and all that kind of stuff, it's going to be positive. If you want to know in advance. I know that you think that everybody's getting laid off, but I'm telling you that the data disagrees with you. Where's my... Ah, shit, it's on Instagram now? All right, let me just get a couple more of these charts done here. What was the last chart that I did? IE? I'm just going to get these. I got somebody that's going to do these for you, so I'm not doing this for you and ruining the stream, but I want to start the process so they know what to do. UMAC. Oh, look at this one. This one's ready to fucking rock. Unusual Machines, Inc. Look at this sexy beast. This thing's a pig ready to rock. Yeah, we're going to open it anyways. We're going to put it somewhere else. UMAC. This thing's a fucking war pig right here. Oh, look at this. This one's sexy. It's not quite a shitgo, so we can talk about it. We can't move this one, so we can actually chat about it. This one's baller. Oh, yeah. This one's gorgeous. Hold above white line. Do you have to write anything about this or no? You guys want me to? Does it even matter? I don't think that it does. They crank into their earnings too, and they sell just before their earnings. That's a beautiful fucking thing. I'm not even going to chart this one. I'm just going to tell you. Rinse, repeat. This is a gorgeous. I like this one too. Yeah, UMAC. Fuck yeah. I like them a lot. Just accumulate and hold. I'm not even going to chart this one. There's no point. Just accumulate it and sell on peaks. It's a good one too. Have stops underneath it, sell stops underneath it. It's easy peasy. Now I have rules posted somewhere, and I'll post them again. When I start posting these stock picks, so just a couple things here. You guys might not know what I'm talking about here. Okay, so I noticed that, or I was told, that there are people out there that sell, I kid you not, there are people out there that sell tickers every week. I have one guy said he sells one ticker a week. He charges $300 a month. I'm not going to say who he is, but he does one ticker a week. And he charges $300 a month. I was like, God damn, that's a fucking guy's like killing it. And we normally do this. We get away from it, then we do it, then we get away from it. So I think what we're going to do now is you'll hear me talk about these tickers. What we'll do is we'll start posting like a write-up on them, how to research them, fundamentals, technicals, and how to trade them. So let's start at the beginning. We could start at the beginning, and we're gonna post them we're gonna post them on the website and on the pro and in a pro channel. So I have to repeat this. So let me see if I can find where it's in the stock channel. See the pro trader rooms stock channel. Nope, that's the wrong one. This is it's the wrong one here. This one? Nope. This one? Nope. Yeah, I put them in the pro trader pit here. I'm gonna find a new home for these things. But here's the deal. Let's start at the beginning. Don't I have a pinned tweet about this shit somewhere? Okay, I'm gonna read this to you here. If you go in the pro chat and look at the pinned messages, it says charts posted for consideration here should be well managed and may or may not be followed up on by CJJ. Please do your due diligence in these. I like to use these two sites for free data. I could go into a big diatribe about this stuff in there, but I'll start attaching it or a more well-rounded message to all of these charts. And let me explain to you the base case on this stuff. So I had someone earlier ask me a question here. Who asked me? King Cuck 88 asked me a question earlier. So I want you to think about the market like this. So you have the S&P 500. I always repeat this. You have the S&P 500, okay? The S&P 500 on average returns about 20% per year. Okay? That means you're just buying major lows every year. You could come into the markets probably in February to April and buy the S&P 500. You could come into the S&P 500 in the fall and buy it again. Really simple. Bull market, bear market, doesn't matter. Does not matter. You're just saving your money. You can even start a base case. Put your money into an interest-bearing account or laddering through bonds and bills. Save up your money. Twice a year, you buy the S&P 500. Whatever you have for money. Very simple. As you accumulate shares of the S&P 500, eventually you can begin to sell options against those shares. Rinse and repeat. Matter of fact, if you buy SPY, which no one likes, it's the uneducated, degenerate thing to buy, but guess what you get? You also get a dividend, right? You get paid a dividend on top, so now you're a dividend bro. You own the S&P 500. You're collecting dividends. You're selling options. Doing pretty well for yourself, right? Matter of fact, if you sell an option and you get caught, right? Called away or you get assigned, you actually get a deal. Usually you get a deal. You believe that? You didn't even get annihilated. And you got paid in the front end of that trade. So you're still making money. And people say like the S&P 500's gone nowhere. They're lying to you. Or they're uninformed. Say it more nicely. I forget what you call it. It's they're not stupid, but they don't know what they're talking about. So if you have an average return of 20%, you can probably compound that, right? Dividends, selling options, make a lot of money, right? That's even more than 20%. So if you can't beat the markets, if you come into the end of your year and you're looking at your P&L, and you're like, I'm a loser this year. I'm between the taxes and what I made, I'm flat. 10 years, I'm flat. Or I finally made my way back after 5 years of losing money. Finally flat. You can just do that. It's the simplest thing in the world. It's a no-brainer. Of course, there's no fun. But you don't have to pay attention to anything. You don't have to watch any of my show. You have to pay attention to Twitter, FinTwit, Wall Street Bets, Stock Twits. Nothing. You don't have to read Bloomberg. You don't have to watch CNBC. You don't do nothing. Easiest thing to do. It's fairly easy. So if you want to beat the S&P 500, or maybe that's a part of your plan, right? Like I'm doing the S&P 500 thing like Cap tells me to do, but you're like, well, I want to beat the S&P 500. There aren't many ways to do that out there. There are some ways to do it. There just aren't many. So you'll see people like, Winky. And you guys know Winky pops in the Discord. I always notice Winky posts shit and people don't give him like lots of love. I'm always fascinated by that. You just search his name. One way or method to beat the S&P 500 that Winky often uses is and let me go back step a little bit here. What makes the S&P 500 awesome is that they rotate companies in and out, right? You don't have to worry about if the CEO is getting involved in politics. You don't have to worry about if the CFO is committing fraud. You don't have to worry about the CEO retiring. You have to worry about fudging guidance, right? Anything like that. The S&P 500 is kind of resilient, isn't it? So if you want to beat the S&P 500, you gotta look for other things, don't you? So what are some of the methods you can do to beat the S&P 500 and still kind of be like that? You could think about two things. One would be look for companies in the S&P 500 that are diverging for a period of time from the pack. So if you see like, if you see like Disney going down while everything else is going up, Disney's down for like 6 months, 9 months. It's in a bear market, not participating. You see Budweiser doing that, or you see whatever it is. Tesla's down for the first leg of a bull market. And they're quality companies. Forget if you like Elon or dislike Tesla or think it's a scam. These are still companies within the S&P 500 that are considered by everyone else to be quality. And so if they're not participating, you can track those companies, right? And look for a bottom in those companies because they will do what? They will eventually rejoin the rest of the pack and they will close that divergence and you will outperform the S&P 500. So that's another way to do it. Hey, Disney's trading $10. Everything else is trading $500-$600. Start scooping up Disney, accumulating it, and all of a sudden you're racing back up to join the S&P 500. You're making tons of money, and you're outperform, and you're in quality. Another way to beat the S&P 500 would be this group of stocks that I talked to you about. So this group of stocks are, if we're in a bull market, you're looking for spec growth and a bunch of other requirements, fundamentals and accumulation, not distribution. They've sold, hopefully they've had a high IPO and they've sold down to fucking zero. That's a gift right now that we IPO companies on highs. It's awesome because you can watch it get sold down to the depths of hell and you know it's a good company. You get to watch their guidance, watch what they're selling, watch what the debt is, all kinds of shit. Behaviors of the company. Otherwise a good company, right? Accumulation, distribution, right? And you can sometimes outperform the S&P 500 that way too, right? You buy a stock that opened IPO at like $100, and all of a sudden it's trading $5 fucking, and you're like, ooh, I'm watching it be accumulated. They've got a bunch of good news and shit. Not good news, like good reports and good ERs, all that kind of stuff. You're like, man, maybe that stock needs to be back at $100. So that stock goes up 3, 4, 500%, and you're now beating the 20% return of the S&P 500 significantly, and you own the stock. And you're maybe selling options against it, right? Selling puts against it as it's accumulating. Now you're making some serious cash, right? And you're outperforming S&P 500. Now that, of course, works in a bull market. If we get into a bear market and you're doing the spec growth and the outperform S&P with individual companies, you then switch to what? As you like get late bull cycle, you're like, yeah, that stock's not going to make it, right? You'll hear Winky talk about that. Winky will say in the beginning of bull market, Winky gave a list and said, these are all the real AI companies. He said, these are all the fake ones. He even said it in our Discord. These are the real ones. These are the fake ones. And I realized they're all going to go up together. But as soon as you see those fake ones hit, 3, 4, 5 time multiples, they start at $5, they're trading $500. It's like we're in late bull cycle, start selling those. You're going to see a collapse down into quality, right? Or maybe a jump over into a different spec growth company or a new IPO. So you can do the inverse of this as well. Now, this leads me right back to people selling fucking 4 stock picks a month for $300. And I'm like, that's bullshit. I'm like, I can pick those fucking stocks. I do a very good job at picking those stocks. And people have been tracking me for years picking those stocks. You can ask any, people that actually run. We have had people that have run ETFs of the stocks that I pick as a whole, and we outperform the S&P 500 by multiples of percentage over 1 to 3 to 5 years. So if we're still in a bull market right now, I'll keep posting these for you in the pro chat. You'll hear me talk about them on the show. You'll hear me barking them out. That's all you get if you're a free member. If you're a supporter, you can ask people what I think about these stocks. But you also need to do your own due diligence, and you also need to, in my opinion, you should consult a financial advisor, whoever your financial advisor is, your local guy. Be like, hey, this guy's telling me about these things, then I did my own research, and I'm coming to you. What do you think of this company? This is what I want to do, right? We've done it here. We've done it for years, but I'm like, you're paying for that? I'm like, really? So we're going to start doing more of it again. Right on, Shintech. Yeah, so what you guys should do is if you're in the summer trade, spreads is where it's at. I think I said this multiple times, right? I'm just repeating right now. Spreads. Find the dip that's good for you on the hourly or daily trigger. Get a spread. Still a little bit of a window left. You get some time between now and probably the 18th or 20th, somewhere in there. I think Pravorsky even said that, I'm bullish till the 18th, 20th. I think it kind of bared up. You might have more time into early July or even late July, but it gets riskier as you get closer. No, fuck no. No, I don't think we fade. I think we buy that to blast above 6,000. We're going to close above 6,000 on Friday. It's like a 70% chance we close above 6,000 on Friday. That's in your last brief. Even yesterday. Are we going up or down or sideways? We're going sideways. We're burning the chains right now to get to 6,000. We can't go to 6,000. We need 6,000 to be worthless when we get there. Do I think we fade NFP after Friday? Positive reaction? No, I think we hit 6,000, and then it's a matter of triggering flows. You guys understand? All right. So when we hit 6,000, it's already happening right now. People are rolling calls higher. There's 2 sides to that. There's a call seller that wants more time and space. understand? So there's a call seller out there, and there's a call buyer. There's two sides to every trade, right? So there's like a call buyer, or we need demand. So we need retailers to believe that we're going to trade, or get more positive, or believe we're going to trade 6,100, 6,200, right? Call sellers want more time and space. They don't want to be selling. No call seller wants to be selling 6,000 calls for the next month, do they? 3 months. So, and we want those calls to be, or the 6,000 to be worthless, basically, when the roll does happen. So as we come up into the 6,000, you're teasing people. Hey, man, I think we're going to trade 6,100, 6,200, right? So you start seeing call buying at 61, 6,200. We'll get close. Sometimes we get close to it, and then we'll roll, and then we'll print it way down the road. Excuse me. So now sometimes we'll keep rolling higher and higher and higher if we start squeezing, but that's a whole nother fucking thing. The basic mechanic is we're trading near 6,000, right? So once we get within this mechanic, if we trade 6,000, we want it to be worthless, right? Or above 6,000, we want that to be worthless, basically, all that chain. And then when we're there, you're triggering FOMO. And what FOMO does is people start buying like 61, 62, and they're already doing it. They're already buying 6,100 right now. So if we can get them to buy 61 and 6,200, right? And we got option sellers are excited. They're like, woo, yeah, baby, I'm selling all these things. I'm selling out through 1 month fucking 6,200 for these suckers, right? You guys understand that? And hold on a second here. So you get the idea, the mechanics in this stuff. So do I think we fade NFP? No, I think that we grind into NFP, and that's the trigger for us to move up into 6,000 on Friday close. If I had to guess, it's like that's probably the time frame. Not guaranteed, but best guess. Yeah, I've been dropping trades all day long. I've been dropping trades all day long. Hold on a second here. Let's do this together. We'll start from scratch together. Hold on here. I feel like people don't know what's going on in the market right now. Hold on. Okay. Ready? We'll start from scratch. I never thought I'd be a teacher. When I was young, I was like, fuck being a teacher. I was like, no way. All right, let's take a look. Oh, hold on a second here. Give me one quick second here. Hold on here. Give me one quick second. Let me go back to a 1 minute. Give me one quick second here. There's better versions, but hold on a second here. Let's see if we can do this together here. Hold on. Give me one quick second. One quick second here. Hold on here, guys. Give me one quick second here. I do. Can I do this? You know what? Give me one quick second. Give me like two. Give me like 2 minutes. Just two. I got something cool for you. Hold on. Give me one quick second here. Hang tight, guys. Uh, 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 uh. One quick second here. New layout. Hold on here. Where is it? No, no. Hold on a minute. One quick second here. Okay, did that work? On here. On here. Does that work? Sweet. There we go. Dude, Grubster, what is going on? All right, go inside the Discord main chat. All right, go inside the main chat, and you'll see that I just posted a script for you. Add that to your charts. We'll start there. I'll wait. Give you guys like 15 minutes here. Dude, what is going on, Grubster? Maybe like 5 more minutes. Go add that to your charts. All right, all right. All right. Okay, you guys ready? All right, go inside the Discord. Go in the market chat channel. Click on that link. All right, we're going to do this together, okay? If you're a pro trader, you add this to your regular charts, pro trader charts, whatever you got. I love Goog here. I like Goog here. I'm watching it in the background. It's gonna fucking explode. I'm super bullish on Brian. I'm super bullish on Goog here, man. It's gonna fucking rip faces off. I'm watching it here in a chart back here. Over here, I'm watching it down here. All right. You guys ready? Okay. Okay, we're going to start off. You got a trading view chart. We're going to go SPY. You can go whatever you want. Do anything you want, okay? So what are we doing here? We had to move higher, right? Whoop. Right? We had 597. We're going to talk about that here in just a minute. Let's get rid of pivots. Let's get rid of that for now. Should have like ICT stuff is very similar to pivots, or excuse me, triggers. Well, the ICT stuff doesn't show momentum, of course. This is if you need simple life. Let's just look at this at baseline here. So what I do this twice a day, and it's the stuff of nightmare fuel. It probably takes me 3 hours in total a day. I'm not shitting you, because I do this everywhere. This isn't even everything that we do. We do all of Mag 7. We do oil and currencies and commodities and you name it, we do it. We do some financial stuff. We do crypto, Bitcoin, you name it. All day, every day, 5 days a week, and twice a day. So I'll show you the routine, okay? Fairly easy. You guys ready? So if you're a pro trader, you can follow along exact. Okay? So we got SPY, right? We always want to know where everybody is, right? We always want to know what traditional traders are. We want to know where the Gamma Bros are. We want to know where the LA waivers are. We want to know where the Momo is. We want to know the hidden hand of the market. All that kind of stuff. Everything you want to know. So I always like to scale out. I think that you should too. I think that you should wake up every morning like I do. Well, you should be watching time, of course, and markets, right? That's not in this thing, but Asia market, London market, New York markets, right? But let's just start here. Scaling out, right? Go to a month. Scroll down. We're going to look at month bars. Why do we look at month bars? Right? What does David AMS say? He says what? Wick does the damage. There's a wick. Body tells the story, right? Body tells the story of what's happening and where we're going, right? And we also have these fair value stuff. So this is expensive. That's cheap. Fairly simple, right? On this basis, cheap, expensive. This is a month, right? Think about this from perspective. This is really cheap, isn't it? Expensive, cheap, super cheap, right? So if you're looking on a monthly basis, you're always looking for cheap, aren't you? So let's say pushed up here and came back down. That would be cheap, right? Now we got a new line up here. This is cheap, right? And for me doing this twice a day, I really don't care about this stuff down here. Sometimes I'll do it, but I don't really care about it for intraday trading or weekly trading or any of that kind of stuff. But I will mark out usually these gaps over here. There's a gap in a gray box right here. There's a gap in the intra-month right here. This actually tells a story back here in November and in September and November of last year. You can see we pushed up, right? Slammed down. See that? Up, right? So that's kind of telling you a story, right? You got a story here, right? Watch the story. Watch this line right here. You're up, down, you're up, right? Down, up, 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 right? And then slam back down right here. Whoop. And all of a sudden, we're creating a new story right here, right? See that? New story right here, right? Up. It's telling you're going up. See it? Fairly easy, right? Not too hard, right? So if that is us going up, probably going to snap a line right about there. This is telling me if we're going to go higher, but this is the jump point right here. And what else happens to be there? Check out what's there. Daily trigger, weekly trigger, right? So even a trader that's not trying to figure all this out could say, well, if we come back down here to the daily, right? There's your orange and yellow, right? See it right there? See it right there? Makes sense? I'm going to change this right here to green, buy. Until it fails, right? I'm going to write the letter M there on a monthly basis. Then I'm going to switch to a weekly basis. Check that out right there. Oh, weekly. You even have a little blood down here. We don't need to go there right now. I'm not going to do that for you guys. There's a lot of work to do this stuff every day, right? You got to do this twice a day, or I do. You don't have to, but I do. Do it for you. Put a weekly down there. El Cheapo. If you really wanted to, you could draw in like a green box or something. You could be like, hey, green box right there. Anything in there is a buy. So if you're in accumulation, anytime we're in the green box, you buy, right? Fairly simple. We're on a weekly basis now. We still have our all-time high right here, right? The red line. Premium high, right? We know that we revisit these things, right? Points of interest in the stock market. Notice how we revisited this. Check this out. Check this out. Here, right? Back again, right? Back again, right? Interest, interest, interest. Lose all this, come back up again. What do? Come back down there, right? A lot of interest at this line, isn't there? This also so happens to be where what else matters? Bulls feel safe here, don't they? You already know they do. Bought it here, they bought it here, they feel safe here. Right now, all they want to do is buy right here, don't they? Feels good, doesn't it? Isn't it? You know that if we traded above this right here, that you would trigger that same emotion. If we were up here, your emotions would be, fuck yeah, bro. And you'd be wanting to buy that same thing again, wouldn't you? This is my jump point right here, bro. Area of interest, area of interest, area of interest, area of interest, right? If we broke below this, you'd be like, oh, no. Oh, no. I got to go back to my other area of interest. Down here, right? Place you feel comfortable and safe, right? Remember, too, when we were buying, when we were adding, right? We knew the roll was coming here. We said, we're going to start our adding here at 70, right? We're going to add again at 62. And then we got the flush, didn't we? But where do we come back to? Hey, where everybody's happy, right? And we got a little extra. Woohoo! Right? Getting out on 90, bro. I don't trust it, right? All this, like, see how this stuff matters here? All areas of interest, okay? So we're going to go to a smaller time frame. This is the daily, right? More information now, right? We know about the all-time high. This is the target, right? We also know about 5s and 10s, don't we? 0s and 5s, right? And we know that we got 600 right here. We know that option sellers love to sell round numbers on OPEX, end of month, end of quarter. We already know that. We'll assume it. We also have another one up here, don't we? 610. Nice and easy. This isn't hard. We're not measuring anything. We're not doing any complex rocket science. Just simple, right? 600 and 6, so 5, right? 5s matter. Nice round numbers. Not too hard, right? We got 620 up here. Put these in if you want. Easy peasy. You don't need to, but in your mind, I want you to think about that stuff. You don't need to be measuring everything. You need to be like, oh, it's a 618, and you don't need to do any of that stuff. You just note that what is here. Do you guys know what's here? Supply. That's where supply is. If you ever go on a book map, you'll see supply at 5s and 0s. That's where you'll see supply right there. Now, if I was going to sell you some options in here, and we're like slamming into 600, I don't want to sell those. I probably want to sell 610 and 620, buy some time, and have not you, but like suckers think we're going there right now. We might get there later, but I want to sell those options, have them. They may get a little bit of value in them, right? I'd actually probably prefer to sell them when we're up here, personally, but have them lose all their value. But that's not for here or there. We already know that we've come up here and we failed 600 already, right? When was that? That was May 19th. Right? There's May 30th. Didn't print those, right? Murdered those options, came back up into the 30th, right? This is like 22nd, 20, something like that, and then slammed it back down again. Nope. Now maybe we can print it now. Can you imagine being that sucker up there? He didn't get paid. Now his options are dead, and they print out the 600, right? My options died, bro, and like 2 weeks later they printed. You ever hear that before? Well, now I'm loading up on 6,000s. Well, if we're going to print that, we can't do it till Friday when it's fucking cheap, right? That's the thesis, at least. We don't need to look at that right now, do we? Let's put that in our brain. Now, this is SPY, right? SPY is 0s and 5s. We also know that futures is a different chart, right? Futures, if you ever watch like Bookmap and stuff, you'll see futures gives you where the real resistance is intraday, right? That's why I have a futures Bookmap up and not SPY. If I had a Bookmap up with SPY, it would just show lines on what? 0s and 5s, right? So if there's lines on SPY Bookmap on 0s and 5s, and futures shows you other intraday and intra-week lines, you can kind of see where we're going within the 0s and 5s, right? Rid of that now. Rid of that now. Next thing we're going to do is we're going to mark out fair value inside of the smaller frame, right? Daily basis, fair value. What's fair value on a daily basis? Do you know? It's right here. Fair value. There. Because this is under, we're going to go green, right? Do another one. Here. Green. Going to type in a little day there. And a little day there, right? So on an intraday basis today, where's cheap? Where's cheap? Down here, isn't it? That's cheap, right? And you actually have two places you can think about where cheap is. It's here. Isn't it? So when you hear me say something like, God damn, if we can get up here and like fail 600 and get down into 88, I'd be a happy guy, wouldn't I? I love it. I'm getting cheap. Discount, baby. Now I'm going to go to a 4-hour basis here. And I get a little bit more information, don't I? We'll get back to the traditional charters and all that kind of stuff in a minute. We'll get back to momentum. We'll get back to counts and all that other stuff that you put in here. Gamma, blah, 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 blah. So now we've got 4 hour. This shows relative strength, you could say, for intraday and intra-week. Or, yeah, intra-week, intraday. How strong are we? 4-hour basis. Right now, what is this showing? Shows a hell of a lot of fucking buyers, isn't there? And it shows you bands of strength, doesn't it? On a 4-hour daily basis, there's a lot of strength right here, isn't there? There's a little one right here, right? There's a bigger one down here, right? And that one's pretty big, right? Expect that to hold, don't you? But even just intraday is a lot of interest right here, isn't there? Buy, 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 buy. To what end? I don't know. Find out. If you're looking for a correction, what would it look like? You'd want to see what? Maybe a failure of 600, a larger correction, if we're looking for a larger correction. You know, something down, right? Down underneath this support, right? Blood them, right? Then box them in, right? Bam. This is now what? Sorry, closing the door on you. Take you down here, right? As a matter of fact, wick and body, you blast down here and then back up. Well, it wouldn't be like that, but you'd have a candle that looked like that, right? Big fat fucking candle, big wick, and look at that. Return here. We'll talk about that stuff in a minute, but just for right now, just so you can like visualize this stuff. 1 hour basis. What do we got going on? We know that there's a bunch of support here. We know that the bears have a lot to get through. Right? We're in buy mode. Oh, there's a few things we can see here. A little bit of a tick right here. Right? We'll make that small. This is the prior high. Make that white. We'll make this dashed. We'll do some traditional charting shit here too, right? Everybody likes traditional charting. I got no problems with traditional charting. I like it actually. Because it tells where other people are, doesn't it? You know, people just do that, right? They just do traditional charting. I think traditional charting's pretty fucking good. Like, it ain't that bad. You can do, I mean, it's pretty fucking good, right? I mean, look at this. Like, you got 1, 2 here, right? Until it breaks. Fucking why fix it? I'm up, I'm down, I'm up, I'm down, I'm up, I'm down. Oh, it turns around and makes a new high. Okay, I know where to buy that. Hey, Cap, it didn't go all the way down here, bro. Yeah, but it did make a new high, didn't it? So I can take that trade now, can't I? Take that part of the trade. That's other concepts, but for right now, we'll put this in here. Starting to get some ideas here, right? Got a prior high right here, got a trend right here. Okay. We also know that zeros and fives matter, so we're going to put 600 in here. We also know from gamma that everybody's targeting 600, right? Everybody. Put a little yellow right there. And now we're going to go back in time, and we're going to look over here. And we're going to start to look at some stuff. There's 600, right? We know that wick is sellers. We know this wick right here is sellers. If you wanted to, I don't bother with it. I mostly am looking for like pivots, but you could draw that in there if you want to. This is why I say things like, I want to see if we go here and fail, or if we peek our heads up, show strength, right? Bye-bye. Now we're looking for the next one up here, right? Coming back to that one, right? Or we fail it. Uh-oh, we're done. You can do that if you want your own. You can draw another one up here, another box. Matter of fact, if you're doing boxes, see this box right here? If you're doing this box right here, you can, I believe, you right-click on it. And you can settings. Click on settings and do a middle line that's white. Rectangle, settings, right. You can make a little, you can do favorites. Favorite all your favorite drawing tools, and then you can move this anywhere you want in your chart. I leave mine up here. You want that white line. You'll oftentimes see price go, when I draw a box, you'll see it go what? Rip, rip, snap. There we go. To the tick, right? Usually that's within a wick. I want to see if we get above that wick or not, or do we hit just the tick? Do we fail it? Do we tick it? Do we break above it? Do we break above it and hold it? All information for the future. Never live in these. Always exit before there. Doesn't matter if we go above. You're out here. So we got more information, don't we? Whole bunch of information now, right? Look at this information we got. All kinds of information. Now here's where things get cool. We're on an hour basis. We're creating what here? I use this half wick. See this one right here? Wait a minute. That should be a line. That should be thick. And this, in our case, it's green. This is like a wick wherever I put it, right? So right in here. Put another one over here. An hourly basis, intraday. An hourly basis. And we got one more in here. Hey, check this out. See that little box right there? We're in business now, right? We got 4 hour down here. We got a 1. 1. You can clone these, but I just do it with my finger. 1. And what else do we have here? Hey, more of these boxes, right? What are they doing right now in here? Poop Island. Green. Check it out. There's a new Poop Island. Poop Island. Whoop. Poop Island. And someone grabbed a discount. Check that. Slick motherfuckers, huh? Someone was buying down here. Look at these wicks. Wick. They're just accumulating in here, aren't they? Boy, oh boy, I wonder where we're going. You want to know where we're going? You can see the wicks right here, can't you? And they tried, didn't they? Slam. Oh, nope. Sorry, buddy. We're buying. Woohoo. Bye. They took a shot at it, though, didn't they? Who's they? Dealers? Shorts? What do you think that is right there? CTA dumping. Got some of the price they want. They want some of this and some of that. Bought, sell. Different marks, right? They got a computer. They're like, hey, we're going to sell at this price, and that price. Get a good average. Now we can look at some more intraday stuff here, can't we? We know about this prior high, right? Right here. We know for shit sure that this guy right here, this fucking guy, whoever that fucking guy is, does not want run over, does he? Take all their stops, right? $598.32. We're not measuring anything yet. Nothing. Now let's look on a smaller time frame. A lot of traders trade on 5 minutes and 15 minutes. Remember, 5 minutes, 15 minutes, and a half hour too. Let's look and see if there's anything comparable here in smaller frames. So we're going to look at a 30-minute. See if we can see anything. Nope. There's a little bit in there. Look at that. A little bit in there, right? Matter of fact, you can just start snapping boxes. One right here. You could actually do this on multiple screens at home. You could have an hourly basis, a 15-minute basis, a 5-minute basis. You could have 4 screens, a 1-minute basis, and even a 10-second basis. Trading futures, you can look on one screen and say, for this hour, I think we're going to do this. And then within that 15-minute and a half hour and 1 minute, I can live within these 10 seconds. right? With these and within the bodies of these candles. So there's a 30-minute box right there. Let's do a 5-minute. Yeah, right there, same place. And we got a little bit lower down here in the half-hour trigger, right? Let's look at a 1-minute basis. See what we can see here. Yeah, all kinds of interest down here, huh? 1 minute's kind of showing it all too, isn't it? And we've got some prior highs we can work with, right? We got one right here. Make that yellow. We're always back and forth, right? Back and forth, back and forth, back and forth. Got another one over here. We're in business, aren't we? Got another one up here. That's the high, the intraday high. We're in business now, right? Starting to work. We got stuff to work with. We got parameters in here. Next thing we can look at is pivots. Turn a pivot on. And here's our one right here. There's our 2 by 600. All kinds of information in here, isn't there? This framework to work within in here, isn't there? You got a framework of stuff you can work on here, right? We can start adding stuff like this. This is 1:30, right? Time, right? We also know 1 o'clock we either get buyers or sellers. We also know at 10:30 in the morning we get the same thing, right? Don't forget market to market too, right? We got U.S. or New York. We got Asia. There's 6 p.m. right there. Did I miss one? There's one more right here. This one right here. A lot of work, isn't it? There's some things we can see here. It's like fairly easy things to see here, right? Here's the hourly basis. What were they doing all day long today? By the hour, by the hour, by the hour, huh? Seems like clockwork, right? Every time it comes down here, I'm going to buy it. We know that there's not trouble, but volatility up here. We know it's up here, right? We know where the prior high is. It's right here, right? Let's look at it. Over there. No, this is all volatility, isn't it? So we know it becomes more volatile as we go higher, right? Slam, slam. Why are we doing this? Why are we doing that? Because of 600, isn't it? Trying to bang through supply to get up here and squeeze, right? If there were more sellers than buyers, what would we do? We'd roll, baby. Takes work to get over this stuff, doesn't it? Bang, 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 right? Matter of fact, it can take so much work that even if we bang up here, we exert so much momentum that we roll, don't we, until we find more support. We know that the hourly trigger and the daily trigger, if momentum is right, will provide that support and eventually do it for us, right? If momentum is good. So let's look on a 30-minute basis on hourly velocity. That's the green line, right? Let's check it out. On a 30-minute basis, we can see that hourly velocity is picking back up again. See it right there, it's picking back up. We also know that currently we're losing a little bit of daily velocity. We need to start closing days on highs, don't we? To get one more push. For top. 18th. Have we started closing on lows yet? Nope. Okay, so it looks pretty good right now. I always like it better when it's like this. But I like the start of a run like this. I always like it down there. And you want the start of a run? It's somewhere in there. Shocker. Mark to bottom. That's how powerful velocity is. So when you get like full negative velocity on an hourly basis in a 30-minute chart, full negative on a daily velocity, right? Scoring hundreds, negative 100, negative 100. Even mark a bottom like this, can't you? Don't fuck with Momo. It's the hidden hand of the market. It'll fuck you up. I promise you. It's when traditional charting fails, Elliott wave fails, gamma fails, not rolling your shit fails, up and down. Why did this not work? Why did your indicator not work? Why did that not work? It's usually Momo. Go back to a 1 minute basis here. Or hold on, we're gonna get rid of the pivots for a minute. We have a bunch of information here. 30-minute looks great. We're going to an hourly basis now. No. Cursor's still getting sticky. I got a high here. I got another high here. I got 600 up here. Right? The target looks like what right now? I think it wants to go up there and do this, right? Until it fails. I got to get through some crap. So, hold on here. I'm going to draw on this little piece of information right here. Right to 600. There it is right there. This is like worst case scenario, right? Doesn't mean it takes us to get all the way over here to the 6th and 5th. But what day is that? That's Friday. Oh, shocker. Getting more information. This is Friday at what time? Hey, 6 p.m. Interesting. High, 6 p.m. on Friday. Isn't that interesting? Now, doesn't mean we're going there. Actually, it's a little bit lower, but just doesn't mean we're going there. But, you know, a little bit of information here. Right there's high. Right there's high again. And look at that. We were told you shall not pass right now. I bet there's a program out there telling you, you shall not pass. You shall not pass. You shall not pass. You shall not pass. Okay. There's two other pieces of information we need to know here. We're likely going to fail 600 and then get over it. Right? So let's just be conservative here. Let's be conservative here. We'll draw that line right there. We'll fail 600 on Friday, right? We also want to know, what is our jump point? Where's Poop Island? Do we know where Poop Island is? Right here. So we'll draw that one right there, back down this one right here, and we'll jump over 600 right here. Now this is next week. Hey. Right there. Here's our Poop Island. As a matter of fact, this Poop Island would probably move here, wouldn't it? So I'm going to bring this one up. I'm going to bring this down just in case. I'm going to make this one right here. Dotted line. Make sense now? Poop Island. If this is Poop Island, the target is what? If this is Poop Island, the target is from now into end of day, Friday at the latest, a trade to 6,000 to fail. Now, can we go up here and do this today? Sure. We get volatile events. We get Trump come out and say something crazy. Hey, we made up with China. Where are we going? We're going right here. I can already tell you right now, if Trump came out today and said something, I'm going to tell you we're going to go right here. You might reverse, consolidate, and then up there to get over. And we have what? Time or price, right? We always talk time or price. We also talk about support, right? Where's support? Let's say we fail and roll down. Love to buy that dip. Woo. We also know some other information, don't we? If we get bad news, we lose this, right? We're trying to buy dips. We got stops underneath. We start to lose that. What happens? Whoop, whoop. If we get a new low, what happens? Uh-oh. Wham, we're going all the way down there, right? Close the gap and then suck back up again, believe it or not. So for the information that we have at this moment, the best information at this moment, this snapshot in time, best information we have at this moment, and you should be doing this in the morning and at nighttime. Best information we have right now is this. Matter of fact, this is the best information you're going to find anywhere. You're not going to find better information anywhere. And until this information changes, this is it, isn't it? Got this little wick right here, too. I didn't draw this one, and I should have, but another little one right there. We already hit it, though. Where to next? You can see it right here, right? telling you that there's what? Some volatility up here, right? Some supply. We also know that's the prior high, right? This is 9:41 on Wednesday. What else can we tell intraday stuff? We got bat wings, don't we? Normally, fail that, right? If we go up above here, what happens? Come back down, bam, higher, right? If we fail this early, what does that mean? Well, if that was that high and that was that high, we're likely going to go lower, aren't we? If that was the low over here, right? Want to see that get bought, right? Hold on. Let me show you this here. This one, right? Last down, 1 and 5 minute held, back up again, trying to get that new high all the way down here. Buyers still here. They want that new high, don't they? And just grinding to where? 6,000, right? Here's trend. That's the 1 hour line that I draw for you every night. This is the expectation right here. Here's the one right here. Here's the one right here. Here's the 4 right there. And we can actually trade all of this, can't we? Up, down, down. See it now? And I get greedy, don't I? I'm like, oh God, if that's trend right there, if we could ever like just get a minute, you know what I mean? Just a minute down there. What could provide that? Friday. NFP. So there's Thursday, 1600 high. Friday, 1600. Check that out. Maybe move that down there. Starting to make a trend, isn't it? Can all of this fail? Sure. But we know where it fails, don't we? As a matter of fact, look at this. A little bit of flattening going on here, isn't there? That hourly trigger. So if I was able to get I was able to get like hey, where some targets are, and maybe we even get some doom down here. Am I fading Friday NFP? Fuck no. Here's Thursday. 1600. So I want to see us what? Trade the failure of 600 on Thursday close. And then I want to see the ramp above into Friday close. Not bad, right? What's going on inside the Mr. Chocolate Monkey? What are you doing in there? Oh, Mr. Chocolate Monkey's working inside the Pro channel. So if you had between today, let's look another way. If you were looking for a print to $5.99 on Thursday close, what are you doing? Add. This is why I get angry in the closes. I'm like, yeah, maybe we'll go in there, right? Go in there Friday. We'll slam that shit up, right? Slam that up into a close. Come back down over here. Buy the goddamn dip. You know what I mean? What's Asia doing? What's London doing? What's early morning New York doing? Are they buyers? No, they're not. Why are they not buyers? What the fuck is going on in U.S. cash? You can do this on ES, a little bit cleaner because you get all markets. If you run this on ES, it's very clean. You'll note that I do put out stuff on ES and NQ and RTY and YM on the weekends, but I do track it in the background. I only show SPY because we're in cash market and SPY. You guys know that I watch SPX in the background too. Why not just buy a $5.99 call spread for Friday close on a low? Smoke a doobie, drink some bourbon, fuck your girlfriend. It's the Catalina mixer. It's too easy. It's like the easiest shit in the world. Right on, Arkansas Slaughter. He's like, I'm just gonna wait till we come back down now. He's like, I just watched the whole entire thing. He's like, we're gonna be down here again. I guarantee it. He's like, come down here tomorrow, get some more snooze. I'm gonna buy that shit like nobody's business. Come back on Friday, 4 p.m. baby, pay me. I bet you could probably even put that out for Monday or Tuesday, and woo, you're getting paid. You know what, Cap? You know what? I know those lines are there and they can fail at any time, so I'm going to put some more time on my spread. Cool. What are you looking at? I'm going to do June 18th, 599C spread, bro, and a low. And even if we roll down on some doom on NFP, it's going to come right back, right? Chances are likely, yes, sir. You could probably even add some more spreads down there if you wanted to, if your bias is to the upside. Looks like it is right now. We can always switch and go bear. We start like rolling and shit. Sure. As a matter of fact, you can keep those on and add some bear spreads if we need to. Here we go. Back at it again. Don't forget, we get Avgo too in the 5th, right? We haven't talked about that either. Maybe Avgo rams us home early. maybe we're on a low in the close of Avgo, and you have some targets for where the sellers are, right? You like know where the market is right now. $1:45 in the afternoon. I realize we're at 6:10 tomorrow, 6:20. I get it. You might get that on Avgo, but I don't know if you get it on Spy. And even if you did, that's a good question. Someone said we'll get 6:10 tomorrow. I want you to also think about when NVIDIA did that. They rolled out every fucking thing so that by 9 a.m. that price was back lower on Spy, didn't they? You'll hear me sometimes say Spy will rip after the bell to like 4:15, but you'll also notice that Spy oftentimes comes back down by the next day's open. Same goes for the downside. So the indexes will like feel the impact, but you'll always come back the next day and we're down again. Now, on an intraday basis, if you're doing an Elliott wave, right, you don't have to do complicated Elliott wave, right? 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, 1, 2, 3. That's it. You don't have to worry about like what we're invalidating and validating and fake this and fake that. You don't need to fuck with that stuff. As long as you're not back testing too low or even too high, kind of count where we're going. Count on any frame you want as a frame of reference. You also know what the gamma is right now, right? I told you about the gamma. Kind of get a better picture of where we're at and where we're going, don't you? I've already done Elliott wave lessons. I even recorded one. There's a recorded Elliott wave lesson, I think, on the website. I got one on there. I think I do. I could have sworn I did either a written post or a video showing Elliott wave. It's in the website, I think. If it isn't, let me know, because I made one. I know I made one. I know I did it or I did a private stream and something. I don't know where I did. I know I did one for you guys. Did the actual rules, basic rules for Elliott wave. You don't need to be like Elliott waivers. I don't want me to be a dickhead, but a racer gang is what they are in my view. I don't feel like Elliott wave's ever. I feel like Elliott wave is something that can catch me in really bad trades. So I just wanted a rough outline. You know, if we fail, okay, fuck it, we fail. I don't care. I just want to know where they are, where they think we're going. I don't care about extensions. I don't care about fucking 4s, 11s, 12s, fucking 7s, and fucking. I don't care. Like I'll count them, but I'm a simple guy. Oh yeah, dude, 100%. Like Elliott wave to me is hella dangerous, or it's not hella dangerous. It's as long as you don't put any faith in it, I think it's fine. It's very common in the market how the market works. But like we're going there. I'm like I don't know. As soon as we start losing support, fuck you, I'm out of here. Bye bye. Like don't marry to any thesis. Like be willing at any point. Like you can like, hey, this is their thesis, is their thesis, their thesis, their thesis. You want to know who's on first, second, third base, who's at bat, and you want to know that. Be aware of that stuff. But like, if any thesis collapses, dude, be willing to take the other side immediately. As you'd say, like I think Chris Siddle made a good comment the other day. He said, "I can do a fucking pirouette and a dime, and change my thesis." And I was like, "Goddamn right." You know, that's a good trader. Good trader has a thesis, has a plan. Best information available, executes a trade based upon the most highest probability outcomes, right? Best part of the trade. If it begins to fail, you take the other side of the trade. And you see where the failures are too, right? So if the trade fails, no problem. Go back and take the other side of the trade. Right on, guys. It's like when you guys see me come on the show every day, I'm doing all this shit already every fucking day. And I'm wrong. I miss things. I get tired. I'm like miss something or whatever. Fuck, I forgot about this. There was one day right before the market went down a bazillion points. It was like 20 minutes before an auction. I'm like, get the fuck out of the market. We're going to an auction. So you're constantly battling fatigue. You're constantly battling. Did I miss something? Is there some news I don't know about coming? Where's price when that news comes? This is why you don't care about fucking news or data. I care about data. I care about the or the business cycle, the economy, and things that are really dangerous. But where are we in price, and what's the news? There's not that much magic behind it. I would say if in your, I spent a lot of my life, my career, I went to school for business, but spent a lot of my life fighting fires. And then my later part of my career was going into businesses that were failing and finding fires everywhere, and then having to figure out which fire was actually worse than the other one or the root cause of that fire. And if you have that in your life, whatever you do, like you're an ER nurse or an ER doctor or you're a trial attorney, if you're an engineer that has to work with hands-on quickly to fix things, any of those kind of professions, probably going to do pretty good in the stock market. It'll come natural to you. You're able to like change your opinions at a moment's notice. The stock market be good to you. Should be able to change your thesis like a flip of a finger. New information. Fuck internet points. I want to tell you, if you're watching the show right now, fuck internet points. They mean nothing. Not a goddamn thing. Don't mean shit. Make money. Grabster, I thought you were in the Discord. If you're a pro trader, if you ever need charts done, there's chart channels that show the charts updated every day in the Discord and on the website. We track Mag 7 twice a day. Yeah. we're here to pick up quarters and collect them for our wife's boyfriend or our mom's boyfriend. And leave him next to the nightstand for him when he leaves for work. Google price target on Google. What time frame do you want? Do you want like sooner or later? 172. 170 to 172. It is a range though. Where's Google? Yeah, like right here, I think it's easy to trade 171.58. Maybe a high of 174. 28 possibly. Let's go look at that. So if you've got this inside the Discord now, here's Google. You want some targets? 4-hour basis. Right here. There's one, 171.58. 174.17 on an hourly basis. Target. It's currently trading right in this close right here, right? Like rotate into Google. Then you should be able to like hit like this one right here. You guys want to see it? Here's Goog. Okay, so we think, all right, let's talk Google really quick. Okay. Let's talk Google. Why did I think rotate into Google? So all week long, I've been like, do Meta on this day. No, I should have said Meta should outperform the entire rest of this run too on Monday. I should have said that, but I didn't. I should have said that. I think I did post Meta. Did I post? Oh, I should have posted Meta for you guys. So of any of the Mag 7 that outperformed this summer, Meta's the best one. Early summer. Rotate into late summer into Apple for a late winter print. Mark those words. Now, there is like some like rotating going on intraday, intra-week in Mag 7 right now. So I like the idea of Google for like end of week. I know that we've got Avgo and NVIDIA and all that other shit going on and all the related AI shit, but I want to in particular point this out. So what I was watching in this structure was this. Here's the daily trigger. Right? You got to ask yourself a question. Are we bearish on Google to depths of hell? I'm not. No, not yet. So in the midterm, right, next few weeks, we got a bounce right here on the daily trigger. We didn't blast through it. I'm getting kind of bulled up. Now we've got the low. We've got the high right here. This was yesterday, okay? So if we're going to do some basic Elliott wave, right, you've got the low. We think that's the low, right? Bounce up, right? And what do we need to do now? Right? You hit support, you catch a bounce, and now you need to go higher, don't you? This is considered the impulse, isn't it? Not this. You get the bounce. Remember something. When you come into any, what you think is I don't care if it's resistance or support, I don't care. If you come down like this, right, you want to see the first bounce and then the new high. Same thing blasting through, right? Blast through, new low. 1, 2. 1, 2. Okay? 1, 2, 1, 2. You want to see that on any time frame. I don't give a fuck if it's an hour, 5 minutes, 1 minute. I don't care. So we got ready. 1. Or I guess it's 1, 2, 3, but you got 1. You now have marked yourself out a high, and you're looking for an impulse move, aren't you? That's what you're looking for. Fairly easy to see, right? So these are our targets up here, here and here, right? On an hourly basis, our first target though is right here, isn't it? And we have a high right here, right? You see how on an hourly basis, the expectation is just below this mark right here. You see that too? So the hourly expectation is only to right here. And you shouldn't be in the trade right here. But if we can get above it, and even better here, we're in business to go up, aren't we? And now you've got your impulse move right here, right? You got your high. You got someone telling you we're trying to turn up. So this would be 1, wouldn't it? 2. Here's your hourly trigger, right? So 1, 2, 3, right? And your 3 should be big, shouldn't it? So we got some places to look at, don't we? Think that's the low. We would be looking for what to happen next. Now, it doesn't mean it's going to happen, but we're looking for something, aren't we? Looking for that right there, right? Just that right there. It could actually be right there. 2, right? 3 should be bigger, shouldn't it? Biggest move should be right about here, right? Close that gap out right there, right? 4, 5. Now, let's look at this trade together. We've got here June 6th, 19th, 18th, 20th, let's say. Say the 20th is the bet that's as far away as possible. And I'm like, it's gonna happen today, bro. I don't know, might not. Right? So we'll extend it out a little bit. We'll say, hold on. We'll give some more room for the trade, right? More room. We're in the summer trade, right? So we're going to go 1 right here. We're not breaking that right there. We're going to go a little bit farther out in time right there, right? That's all we need. Is to break that one right there. We need to break that. That would be nice, wouldn't it? We don't even need that. We just need this right here. That's your prior high right there. That one right there. And we hold that right there. We'll just do that one out to there. Make it nice and easy. Get rid of that. That's our instigation. We got this hourly trigger coming up. You see it right here? Right there. And that's our thing right there. We got this one right here. Give me that intraday high, please. Slap that shit. So I get myself a spread for the 20th to go up here and tag some of these. I lower my expectations to 171. If we go up there and do it early and get some doom, some Trump noise, woo, I don't care, 171. I let the trade run. Maybe I do a spread to 177, 172, 170, maybe 178 to 170. Here's my range. Not a bad looking trade, right? If the trade is nil, right, or not worthy, what is it? Stops under here, right? Raise them up, raise them up, raise them up. Market blasts down, sucks back up. That's where I hit my stops right there, right? Then we're going down, right? Or we get the new high and I reposition right here with stops right here, right? Take the money and run. That was top for now. That was top, I think, for now. Hey, blammo. Look at that, almost perfect. Almost a pinstrike. Maybe we get one more up there. Failure to get a new high on the intraday so far. What's my long-term thesis on bros? My long-term thesis on, is that coffee? Is that the coffee guys? You just accumulate the lows on bros, and then when it squeezes, you check out. Go back and rinse and repeat. It's the same thing. I'm gonna do it in this covered on the stream right now. $6,000 on what? Is that a yes? We want to break 6,000 on SPX and on SPY. It should be, this is a good insider thing for you. If you don't know, right, when we hit 6,000 on like ES, we should also hit it on SPX and SPY, or if we hit SPY first, or depending upon where the contracts are and stuff, you should see like hammering on that 6,000 in different markets. And if you get paid earlier, it's even better, isn't it? To get paid on 6,000 early, woohoo! I under expected and I overperformed. Yeah. So there's some Google for you down below here. You guys want to snip that? Want a freebie? There it is right there. A beautiful fucking thing right there. Goddamn work of art. Goddamn work art. Got a bunch of targets, got some stops. Goog. Hey, you get it early. Oh, I did a 170. Took my money. Oh my God, everything's getting awful. I don't know. Besant ruining my day. I took the money in Rand cap. Was awesome. I opened up 3 spreads cap. I took one off. I let one more run. I got the last one for that big up there. They're going to try to blast this down depths of hell. Where do they normally go? Somewhere in here, right? There's your 30-minute trigger. There's trend, right? Up, down, up, down, up. Now, what about if we make a new trend? Let's talk that really quick. So, what about when you're like this? Hey, it's at this cap and it held. That's why we have these rules, right? So let's say we back test the 1 and 5 minute trigger. They come all the way down here and drill. You get a quick lip down, back up again, though. Right? Price what? Does a new high, back tests. Then we're back on again, aren't we? There and tag that one, right? So I use rules with all of this stuff, right? Kind of have to hold this one, to be honest with you. You could wick this briefly. I would say the 20th. I would even put, if it was me, I would even put like July, either July OPEX or I would do July 4th maybe, or July OPEX. More time, the better. It's always better with time. If conditions change between now and then, you can get out. If you get print early, you're happy. Lower expectations, more time. You notice when we took the summer trade, I didn't say like, hey, let's do 620. I didn't say let's do 620 by the June 20th. I was like, yeah, let's do 605. You could do like farther out in time, bigger spread. You could do like 620 with like, I would do like end of quarter. Well, not end of quarter. I would probably do like July 30th. And I wouldn't expect to print 620 either. I'd expect to like print 618 or something. So like rein it in like 610 or something like that. Maybe you get like 2 pumps. But even then you could do 2 different spreads. You really don't need to do that. So okay, so we're gonna do bros now. Now we're doing bros, right? Not bro. Yeah, bros. Okay. Now we're gonna talk about this. We're gonna talk about this company called Bros. This is Dutch Bros Coffee. Now, we've been covering Dutch Bros around here for a long time, okay? We've been covering Dutch Bros since it was a pretty fucking cheap stock. This is Dutch Bros. We've been covering these guys, I want to say, since down here somewhere. This is a beautiful fucking stock. It's absolutely gorgeous. It's been nothing but a fucking printer. We talked about buying this and holding it. This is like classic hold on a second, I'll show you this. Let's go back here. So this company IPO'd back in 2021. And they did us a service. They cranked up and they printed $85. They had no business being up there. So what's fascinating about IPOs these days is you can start to sell them down from a high, and you have time to pay attention to what they're doing along the way. Bro, why is the R so good and the guidance so good and the market's going down? So we can get a goddamn dip, bro. And they've proven themselves over time. And you see the belly here, right? This turning up. It's fucking beautiful, right? So you just buy. And we made a new high here, which is great. Prior high right here. That bad boy right there. And what do I want to show you about this? There's always a sucker up here. And this sucker diamond hands and doesn't want to get unrealized losses. So the moment you trade up here, this asshole right here, he's like cheering you on. Yeah, dude, we're going to all-time highs. We're gonna go to fucking $200. All he wants is off the boat. So that's who your seller is right here. That guy that bought the top. He just wants off the ride. He's been waiting now for 3 years. Probably puts a post on social media and says, whew, I finally got out, bro. Now that means you have to wear these guys out. Wear them out. Wear them out. This is distribution if you don't know. This is a distribution pattern. In the moment that you wear them out, we can then take off again. And that sucker over here, he'll be a buyer up here again. I kid you not. That's how these fucking people operate. Now, this is likely a distribution pattern. It's not negative per se, but it will blow up and go higher. It will. It's not done. I promise you. So, what I want you to think about here is this is not an impulse wave. You think that's an impulse? It's not. You could say that this is the bat wing in that this is going to immediately break higher. I don't think so. I think it does, just not right away. So, hold on here. I think it is, but I think the first thing you need, and you might go, what about that cap right there? I don't think so. I think you need to do like 1, 2, 3, and then you're out of here. Something like that. So you're probably stuck in some kind of range. Like that. And maybe like that. Now you do have some positivity here. This is where momentum comes in. And you also have that starting out right there. And you got this starting out right here. Right about there. This is called declining something. I forget the fuck it's called. Declining bull, some kind of like declining bullishness thing. This one right here. Blue. So yes, does it go higher? Yes, and what's the target? We failed 86, so your target is 100 this time. 98.5, believe it or not. Right about there. So there's Bros. Bros needs to stay above this frame. If you get the payout earlier, cool. But you should do something like this, and you may get one more. That's October 24th. Shocker. So roughly there. End of year, $100. These are your add places. Add here, add here, add here for this payoff here. If it happens early in July, fuck yeah, even better. You go up, down, right? Slam up there to $100, even better. Add for either a payout in summer or end of year, $100. Bros. Dutch brothers. Trying to give you the worst case scenario. If you wanted to take the money and run on a high up here, cool. Get in again. Can do that. $88. New high shows bullishness, even if we go down. You know, bam, bam. Here's your corrective move right here. Go up here. Corrective move. It's here. And this would be 1, 2, 3, 4, 5. Make sense? 1, 2, 3, 4, 5. 1, right? 2, 3. Did I get that wrong or right? 1, 2, 3, 4, 5. Yep, I got that right. Big correction. Bigger move up there. Makes sense? Dutch Bros. What up, Paul? Notice we didn't have the news on at all today. It was kind of nice, wasn't it? Didn't care about any of the news, did we? Ski. Did you give her a 96? I now have the pro chat and the market chat up. It's kind of cool. Kind of digging it. We're so close. SPX had a high of 5990.65. I think SPX fucks around and SPY might be able to do it. We're going to get some hanky-panky here at some point where you get like the disparity between price. Goog looking good right now. Amazon picking up right now. Meta starting back up. Apple weak. Nvidia strong right now. Avgo strong. MSFT looking good too. Pumporama going on right now. These fucking sellers are swimming around me, I can tell. All the bears want to see a failure of 6,000 in a roll. I teased them on Twitter this morning. I was like, don't get too excited yet, boys. We ain't there yet. We got to hit 6,000.
Dynamics natural gas July futures settle at around $3.71. Gasoline July futures settle at around $2.03 a gallon. Dynamics WTI crude July futures settle at $62.80.
Oh, yeah. The bears want to roll on 6,000. 100%.
88%. And NYMEX diesel July futures settle at
You guys don't pay attention where the bears are? I'm a bull. I always want to know where the bears are. Where the fuck are the bears? You guys never think about that? Like, where are they hiding out? I always think about where they're fucking waiting. They're like, they're just, all they're waiting for is, we touch 6,000, you know what they're going to do, right? Fucking short. Unusual Machines, UMAC. They make murder bots. Give me a second here, guys. Let me just check the market really quick. I just got to check a few things here. One quick second, okay, guys? So make sure we're not running into anything. It's now 2:32 in the afternoon. We got the beige book. We got shit going on until tomorrow. We got balance of trade at 8:30, exports and imports and initial jobless claims and continuing claims at 8:30. We got non-farms tomorrow, but it's productivity final, quarter over quarter final, so it's not really non-farms either. We do have a 4-week and 8-week bill auction at 11:30. At 12, we do get a 15 and 30-year mortgage. What am I looking at here? Give me a quick second. I want to run through some of this news here. Oh, shit. I meant to. Fuck. Hold on, guys. I had something for you. If you're a bear, I got something for you here. No, you know what? I shouldn't say that's not right to say. I'm going to say this to you, okay? If you're a bull, you want to be aware of this. But you don't need to get fucking crazy, okay? God damn it. Hold on, guys. I got it somewhere else. Shit, hold on here. I got it on another computer. All right, so I got to remember to do this. Maybe I should just do it right now. Okay. So let me explain some things to you guys, okay? I'm gonna make this really fucking simple, okay? I just posted for you 2 white papers for you to consume and read. You don't need to go crazy on this information. It's just need to know market risk. It's untradeable. GS has some shit to trade on this, but in my view, they're selling you book, an ohm, and an ETF they have, okay? So get that out of the way. I do want to explain what this means, though, in simple terms, because this is a little bit bigger than macro. And being like a dumb cash market trader, being a dumb dumb cash market trader, like hard enough to understand the market, let alone business cycles or macro for the U.S. and the U.S. markets. Where do I start with this? The easiest place to start with this would be, hold on here. The easiest place to start with this would be, hold on here. The Fed, can I get the, okay, so the Fed has a division of international finance. And Jerome Powell actually touched on this subject 2 days ago. And he was actually inferencing that subject that I just posted in there, that need to know market risk. It's untradeable. Don't fucking try to trade it. Don't be fucking shorting the market over it. Don't do it. Now, on top line, that language should be removed by the time the bill goes for a vote. That bill is likely dead. It's dead. Or it needs major changes done to it. Okay? Now, I want to simplify this for you. So, if you're a corporation, right? If I'm a publicly traded U.S. company, so I'm Apple, right? I create debt bonds, right, to pay for my operations in the course of a year. We're going to keep this really dumbed down. So I'm a wealthy company. I go to a bank and I say, hey, I bring in, I don't know, $10 billion a year. Can you give me a cheap loan? I can go to a prime bank, a hedge fund. I can go anywhere I want, right? I can even go to international investors. I can go anywhere I want. I want a loan. You go, that's Apple, man. They're not going bankrupt. Sure, I'll give you a loan, create the bond, right? I'll buy part of it, and you'll pay me back so many points on it, right? Theoretically. The government does the same thing, the U.S. government. Your local municipality does this. Your local county and city governments and state governments, they want to fund a project, right? They can do this different ways, but you get the gist of this, right? Now, when credit markets freeze up or bond markets freeze up, you can literally force a company to grind to a halt. A bank can also grind to a halt. So when you see like liquidity being injected into certain markets, it's to keep things running smoothly, right? You could literally bankrupt a company almost instantaneously if money freezes up. So when you think back to like Bretton Woods, and you think back to we have all these countries saying the dollar is going to be the reserve currency for the world, or for democratic world. So we're going to use the dollar, right? And the U.S. is going to provide bonds, right? And U.S. companies and your companies from your country could do the same thing, especially if they're multinational or if they're international companies that does business with other countries, right? So let's say you have a company in Germany, and let's say you have like the top 100 companies in Germany. These are German companies, and they do business with all these other countries. Like Apple sells iPhones in Germany, right? So Germany's whole economy is based on their biggest companies. They're normally multinational companies. The U.S. has the same, right? Apple, Amazon, Walmart, you name it, right? Starbucks. So you have this money flow that's always going around and around and around and around and around, right? And you need that money flow to continue to go around and round and round. Doesn't matter if it's our bond market for the government or even for companies. You can even freeze money from the consumer. You can freeze money from a small businessman, middle businessman. Well, I'm not going to hire any people on right now, and I'm not going to order any more product. As a matter of fact, I'm going to start saving money. And they start seeing like freezing of money flow, right? You can see it on every level of your family, to the company you work for, to multinational countries, or companies and countries, and then even on a worldwide scale between country to country. And right now, the US dollar is it, right? It's the currency. We piss in a toilet bowl, and other countries piss in a hole because the US dollar is supreme, right? So, inside of this new bill, the BBB bill, right? There's whoever wrote that bill is slipping in language that's saying what? You know what? That you can tax companies directly from another country. Right? Like you can go direct to another country, right? And tax them. So, simply put, it would kind of be like all of a sudden in the U.S. one day, there's no more buyers of bonds for U.S. corporations from other countries. And you would automatically like freeze that company up. Theoretically, you could bankrupt that company from the U.S. and send our economy into a fucking tailspin. It's like a jump up in economic warfare to where you could force countries to do what you want them to do. It's like blackmail. What's even scarier about that is if you were to hit that nuclear button and have that impact upon a multinational country, not from the United States, and then you've got the U.S. having our own debt issuance, right? Bonds, right? Either from the government or from corporations, in kind, foreign countries could then stop buying U.S. bonds, whether they're corporate or government. And what it would be like not just a nuclear button, but like you're nuking another economy of another country, and then they nuke our economy and country. It's not even just a form of economic warfare. It's like a form of nuclear war with money. Does that make any sense to you guys? So there's like rules in here right now where in that big, beautiful bill, they're saying, well, the president can do that. The executive authority can do that. And right now, they cannot. So you do want to watch to make sure that that doesn't happen. Why? Think about it. If you're a bond vigilante, if you're in the bond market, you have money. Make your money from the bond market. You would never want that power in one person's hands. So they're likely, the gray suits are likely going to go to the executive and say, don't fucking do this. And if the executive says, fuck you, we're going to do it, they could act up, couldn't they? Just cause panic in the bond market. Not just our bond market, but world bond markets. And then if they continued to push the issue in the bill, they would definitely freak out. Now, they're not going to freak out today. They're not going to freak out this week. It's not what's going to happen. They're going to go and they're going to talk behind closed doors. So this is no risk to the market at the moment. But you do want to monitor in the background closely as that bill progresses through Congress. Make sure that it's removed from the vote. If it stays in the bill, which I don't think it will in any way, shape, or form, I would then be freaked out. Like, oh yeah, that's really bad and dangerous, and the bond market's gonna fucking snap. Not just our bond market, but the world's bond markets would probably freak out because you're leaving that up to just one person, and you don't ever want to leave something like that up to one person ever, no matter what party they're from. You want speed bumps, you want votes, you want a bunch of different conferencing and talking and influence and all that kind of stuff, and you want to keep bond markets flowing. You want to keep real money flowing. Anything that endangers the flow of money is dangerous. It's kind of why we have a Fed to a point that can make sure that money doesn't freeze up, right? It's why we have the Fed to step in or the Treasury Department to step in to try to keep money flowing, right? Buyer of last resort, discount window, you name it, right? Swaps. As a matter of fact, that Division of International Finance, they stepped in as well during COVID, and they also stepped in during the 2008 financial crisis. And those guys that Jerome Powell was speaking to, they're concerned about that portion of the bill. So don't try to trade it. Don't buy into the, like, GS has this and that, and you do a pairs trade. Don't fuck with that stuff.
Brent crude futures
Just don't do it.
$4.80.
You're a retail trader trading NVIDIA and GME. But just know about it as a headline risk down the road as we make our way through spring or early and mid-summer for these bills to pass. I think it's Section 889 or something like that. That's all you really need to know. And what you really need to know is you don't want to see currency, the U.S. dollar, grind to a halt internationally. And that is capital money. If you want to know what that's called, it's capital money. And that capital money flow needs to continue around the world. You could literally fucking nuke the entire world economy if that stays potentially with one person. You could nuke the entire world economy if you wanted to. It's fucking stuff of nightmare fuel. So there's the white papers on it. It's in the Discord. You can read it. Don't get crazy. Don't let it get to your brain. Don't go around going, oh my God, we're all going to die.
To be signing proclamations. We'll see if there's a live video available and get it out to you if there is one.
This is now turning red. Remember, we're not doomish yet, are we? Just looking for dips to buy on trend. We know where resistance is. 2:50 in the afternoon. Give me 10 minutes. I'm going to take a quick break. Be right back with you guys. It's extremely it's not tradable, but it's very poor. I'm actually shocked they even tried to do it.
So it does not appear that there is
even supporters of the executive branch are like, no.
The roll call does note.
Even Wall Street's like, fuck no. You're not getting that power. Fuck no. That's kind of like saying one guy at the Fed runs monetary policy. That doesn't happen either. And especially not for the entire fucking world. It's a little absurdist. Oh, yeah, Goog. Keep pumping, baby. Keep on pumping, Goog. Keep on pumping. Don't stop now. Amazon looks good, too. I like Amazon here, too. SPY just gyrates as everything else is ripping in tech right now. Yeah, I talked about Goog today. Went in depth about it. charted it all out. 1:30-ish. About an hour or two ago. Hold on here. You can watch it and snip a chart from it. Time and all that stuff, brother. Talked about a bunch of stocks today. Trade ideas, stocks, theory, thesis, you name it. We talked about process and all that stuff. What is it? It's all Indians. What do they say AI is right now? Actually, Indians. I like that. Did you see the? Did you see? Fucking condor. Give me 5 minutes. I gotta go potty. Give me 5 minutes.
So we are shortly expecting Trump to sign some proclamations. Again, this is a closed press event. It does not appear that there is any live videos. If one becomes available, though, we'll get it out to you. The Dow trades nearly flat in afternoon trade, last down around spot 0.03%. US money market fund assets are up $67.43 billion for the week ending June 3rd.
So the
Voice news disconnected.
this is not a prime setup to go up on, at least on a half-hour basis. It's kind of bullish. I wish it was like super negative right here. So just hang tight. We're almost at the done. I mean, there can be an argument made that this gets bought, but I'd like to see a little bit more blood if possible. We'll see. This is trend right here. I wish it was a little bit lower right now. I just looked at 30-minute half-hour velocity. What am I missing here? Oh, yeah. Yeah, we got Goog Trade 169. They're cranking right now. Fuck yeah, baby. Do it quick. Come on, Google. Some people listen out there. Some people listen. Then again, other people are too scared. Let's go look at I know some people are fucking listening. I know the motherfuckers that listen are rich. Let's just breathe in again, okay? Let's just chill and relax and watch this for a minute, okay? So, this is your preliminary expectation. What is there to divine in here? Do you notice how tech is firing off right now? Woo, baby! And that's not happening here, is it? So SPY is the hedge, right? And there's a lot of horse trading going on up here, right? A lot of people rolling and stuff. If you're a bull, what are you trying to buy here? Half-hour trigger, hourly trigger, right? You know what I'm saying here? Let me get rid of that. We're trying to show you. So if you get any opportunity, I've been saying this all week, any opportunity to get long, there is something to note here. We are looking for 599.69 coming in tomorrow. If you were a dealer, what would you try to do into this? You'd try to murder bot, right? In the overnight, run it back up, whoop, right? So if you were a dealer, pound, right? So if you can catch a low in here, I'll say it again today. Nice little call spread, 595, 596, trading 599 maybe. Nice and easy, right? I want you to think about this price action right here. Pound it down, pound it down. Will you get another opportunity? Probably. Pound it down, right? Try to catch a little bit of that action. And then we've got the doom and gloom of NFP over here, right? And then we got the actual tag, right? Pound, swing high into Friday close. Fairly easy. So just be patient. You catch a nice low. We've had many opportunities to catch lows. A low here, low here, low here. Let's look at this on an intraday basis. We've had nice, beautiful trades, right? And just look at how gorgeous this is, right? Up, down, up, down, up, down. Maybe we can catch another up over here. Nice, easy trading. Easy trading, right? Up, down. Looking for another up. Now, there is something to be said here. We did not quite get do want you to see this right here. I'm always out here watching this stuff. See this right here? See, that's the high right there. That's at 9:42 on Wednesday. And we missed it. See that? These are these little fucking programs. And they're like pennies, right? You're always watching, right? Was that Sully or something? I'm always watching you up here, right? We missed it. So do you think this holds? Probably not. I don't think this holds. I think we blast down probably here. Catch a new low. Matter of fact, that high was right here. Just so you can see it. This was the high. This was a failure. So if that's the high, or that's the low, you're gonna expect to go a little bit lower, right? So there might be some bad news overnight. Get what I'm saying over there? Maybe over there. Hourly trigger. See if we can catch that. Just by a penny, we missed it. Just by, like, I think it was like 2 or 3 pennies. So we'll see if we can grab this. So let me ask this question then. So if I think we can go down here, right? That's where I think we can go. What if I'm wrong? What if, because it doesn't always work. So you got the prior high right here. We failed to get a new high. That's super bullish, by the way. Starting to make new lows. What if I'm wrong? We don't go down here. So if we aren't going to go down there, how would I know? Well, we can just watch what? Price action, right? We can leave this right here. And if it reverses, like the 1 out of 3 out of 7 times that it still reverses. So we've got our eyes on the prize down below, down here. And if I'm wrong, we just watch reversals, right? We get a reversal up here, right? Upsie. And start looking higher to take that out into the close here today. We don't need this part of the trade. We just need this part of the trade right here. We can do that too. We could actually do it like this. Could actually get the new low, right? And then a corrective move like this. 1, 2, 3. And then you get the what? 1, 2, 3, 4, 5 down to that lower over there. And then we go up, right? There's like a bunch of different inflection points to deal with. And they just did it, didn't they? They just marked it out, didn't they? That's now green. Let's see if we can get that intraday high into the bell here. The beige book. I want to read that really quick. Hold on here. Or if they're just CNBC is giving a spin on it. I want to see why they're spinning this. Think tight, guys. This isn't the best beige book I've seen. I gotta watch this here for a minute. I gotta read this. Hold on. Slightly since the previous report, half the slight to moderate declines like fee. No change. This is from the business level, from the consumer and small business level here. Lower employee turnover rates. Well, that's good. That's more neutral then. Hiring plans had not changed. I wouldn't go as far as how CNBC is portraying it. Slow hiring, not really. More neutral. Sorry, I had to read through this really quick. Yeah, you want to see the end of the day pump? They did it already. They did it last night. They did it when you couldn't trade it. Spreads are your friend. You already beat that one. That's good. One minute's curling up right now. See if you can come back and push up higher now and hit down lower. A little bit farther over there. A little bit too we'll just draw one for now. Right there. Start looking wonky. Man, look at that SPX Gamma just parked on 59.80 like it wants to roll. One hour doesn't look so bad. Looks like Poop Island still. I got to read that beige book later. I'm ready to take a trade, though. The debt limit should be scrapped. Yeah, I agree. Yesterday, we had a full risk on rally led by RTY, short covering and semis both contributed to performance today, while headlines attributed today's performance to Jolt's release. We don't necessarily think so. Jolt's regularly lagged April. Investors are more focusing on Friday's NFP or May labor market release. No, they aren't. You think yesterday's rally is more driven by positive earnings in general, sales beats? I agree with that. They're lying right now. That's JPM bullshit. GS, we met with over 80 investors during our marketing trip to U.S. and Singapore over the past week. We feel that the overall sentiment in AI demand has turned more positive among investors. We now see a decreasing likelihood of further and more significant AI order cut near term, thanks to the improving upstream and downstream supply stream mismatch. But that's all good. The retail's starting to buy. Yeah, we know that yesterday. We saw that yesterday. We saw that with the rolling of calls yesterday. 6100 was rolling yesterday. We saw that. We actually saw it in real time yesterday. Calls are being sold at 6100 to retailers. That's good. Bag holders. Always like seeing bag holders. What else do we see here? Net gamma. 6100 is increasing yet again. That's good to see. Oh. On now. Goddamn right. 2-day calls maxing out right now. 6,000. Give me a second here, guys. I got a bunch of stuff here. Max Payne is lower today. It's at 590. That's where I've got us too. I've got us at no, I don't have us that low. I don't have us that low. Max Payne currently. Well, today, SPY. No, I don't want the 6th. All right, let's look at the 6th. Fuck it. Max Payne for the 6th. Huh. Let me just check the Max Payne for Run Away Without Me. That date is stale. I want to see what it looks like it's kind of messy right now too. Max Payne's 590 for tomorrow. 585 for Friday. Oof. That is false. Reversal underway right now. Goog's getting a little weak here into the close. Coming into the prior high in the morning at 169.58. At a high just now of 169.34. No more calls on Google unless it gets above 169.58. You need to see it get beat. What else we got here? What else looks good for tomorrow? Google still looks good for tomorrow. Amazon looks good for tomorrow. What else are we looking at here? Just want to go through some of this stuff here. That. SPX 1-date options. 6,000 still on tap. Cool. We're back into horse trading now. You see it? Same as yesterday, more horse trading. We're back into the whole roll your calls. Roll your calls. Gently down the stream. Trump saying the ADP numbers are out. Too late. Powell must now lower the rate. False. Bessent's already doing QE. We already know that. I posted the chart on Twitter 2 days ago. He's placating the bond market. So bond market's fine. This is false. I want to tell you something. Like these tweets, he doesn't know what the fuck he's talking about. But just be honest with you. He doesn't know what the fuck he's talking about. Powell doesn't have to do a goddamn thing. Not a goddamn thing. Not a thing. He's likely going to cut, but not now. He ain't cutting shit. I wouldn't cut shit. He only got so much ammunition. And the longer that Powell does not have to cut, it ropes Trump in. You know that, right? You guys know that? I'm in no trade right now. If I have one, I'll post it for you. I'll post it in the what do you want to know about the commercial real estate loans? The bond market's not in trouble because of commercial real estate. There's what do you mean by that? Visionary 9747, sorry. What do you mean by that? I could probably try to explain it to you. What do you want to know? Can you give me better context? So there's like, if you want to know about the housing or all the real estate market, so no. Oh God, no. Whoever's giving you those rumors are out of their fucking minds. There's like there's some really bad look. The fucking Fed, right, can wash all of those loans. The Fed can just absorb it. No. That's not. Wait a minute. You're mixing up what Wolf Street's talking about. We're mixing up a whole bunch of stuff here. We're mixing different things. Yes, there's articles about this, different contexts. So slow down. There are some really bad loans out there right now. They're older manufacturing buildings, and they're multifamily buildings. So like big, like 100-unit building. Those loans are fucking poison. And then older manufacturing buildings are poison right now too. But all those like MBS stuff and swaps are like all wrapped up with the government. The government's backing all those loans. So no, they're not. They're not. No, who's saying that? Who the fuck is saying that? I think Wolf actually addresses that specific question. Someone asked that same question to him recently. He was like, "You're out of your fucking mind." It's like, no, our markets aren't like that anymore. They want them off their books, so if they can get them off their books, they will. But if they can't and they start to implode, the Fed will just, it's like free money printing in a way. Does that make sense? No, don't listen to these people talk like that stuff. You got to start reading Wolf Richter, because like, it's even not only that. No, they're fine. They're fine. That's all bullshit. You gotta understand, like, if I'm the government and I guarantee a loan and it implodes in itself, I can just absorb the debt. Like, I'm the underwriter. Like, it's not like I write the money for it. You know what I mean? Like, that's what, like, so many structurally, how we do this stuff has changed since 2008 and 9. It's not the same anymore. We're not in that place anymore. Does that make sense? Like, here, I'll read a quote to you. Hang tight. This is the same thing as, like, I'm gonna give you a simpler argument in this. I think, like, don't quote me on this because I don't have it right in front of me, but I think it's like 60% of people own their own home with no mortgage. 0 mortgage. Okay? That's like 60%. We've actually made a better buyer since 2008. It's like, so ready for this? Like 60% of people have no mortgage. You might have a mortgage, but 60% of people don't. Not only that, we have like the highest rate of cash buyers in history. And here's what gets crazier. Of all homeowners, right? People that bought a home, like the majority of them bought like decades ago, like a decade or more ago. Like, so when people are like, well, all those people that bought the inflated housing prices in, 2019, 2020, 21, egg on their face, whole market's going to collapse, right? That's like 5% of the housing market. And a portion of those people will likely be willing to live in their home for decades. So, like, there's no housing crisis either.
Canadian steel producers
might shock you to hear that. Now,
they need to reinstate retaliatory tariffs on U.S. steel.
There could be a shock if money stops flowing, where a bank can call a loan back even if it's a good loan, if the banks need money. But they've been through this once before already. There's so much misinformation out there. It's like, it's fucking crazy. Look at this. Hiring in private sector surges despite all the moaning and groaning. Look at this most recent article. This is from today. Hiring in private sector surges despite all the moaning and groaning about the economy or whatever. Yeah, I got us going down here. I mean, they did get that wick right there. I didn't take the trade. Like, our real estate markets are nowhere near what they once were in any way, shape, or form. Like, so my point behind this though is this: if I'm the U.S. guy, or if me, Captain Jim James, guarantees your loan, I'm on the hook for it, right? I have to pay it. If I don't have the money, I declare bankruptcy, don't I? Now, let's say I had Captain Jim James currency, and I said, you wanted to buy a house, and I said to you, and they said, you need a co-signer for that. Or you need, or whatever, right? Like, hey, Jim, I want to buy a house. Well, ask them if they'll buy Captain Jim James currency. And they go, yes, we'll take his currency in the full faith and credit of Captain Jim James. So I backed the loan. Not only that, I got the money too, right? I got both. I'm the guarantor, and I'm printing the money that guy's accepting. So let's say that loan gets toxic, right? So I go and I print more Captain Jim James currency and give it to the guy that I promised. Is there any problem? No. Are people going to whine and bitch about it and say the bond market's going to freak out? Sure, just inject more cash. I'm serious. Like, you can see the bad side of this too, right? You can see the bad side of this. We've made a more resilient buyer, right? People can't go out and get 3, 4 mortgages, buy 4, 5 fucking houses, be flipping. They can, but they do it differently today with cash, hard money. Hard money they do it with. So it's like today, like our housing market really truly is way more resilient than it's ever been. Not only housing, but commercial real estate, all of it. I mean, there's some toxic shit out there, but who's backing it now? I'll take a trade if it goes up there. We're just not there yet. Otherwise, I'm waiting lower. Yeah, me too. Me too, Wendy's. I'd prefer lower too. Like we have and even when it matters, now there is some stinkiness out there. Like there are some problems out there. There are some like major macro problems. If you want to know like what the major macro problems are, the threat of recession around the world is. They could drag the U.S. into a recession. That's dangerous. Locking up money flow in your household, local mid-sized businesses. There is some of that going on right now. You're afraid to invest in the stock market. That showed in the PCE numbers. So there's a little bit of money freezing up. So you're witnessing or you're feeling that probably. If you work for a smaller mid-sized business or your family, you might be feeling it. It's showing that in the data. The soft data also shows that you're scared, but it's not happening in our bigger, larger markets yet. So we haven't ground to a halt. That could be a problem with real estate and commercial real estate and stuff like that. And but we're not there yet. It's not today. A lot of tax games played with corporations in general, right? These fucking companies don't pay any fucking taxes, do they? They don't pay any fucking taxes. They fucking form a U.S. company. They fucking do the business in Ireland. Fucking skipping all those taxes. Free money loans to run their companies, right? You guys should start watching Wolf Richter. This guy will go after, like, he doesn't care about politics. He'll go after the Democrats, Republicans. He doesn't care. You guys should start reading this guy in depth. Like, read all of his articles, start reading them over and over and over, read the commentary. And look at who's commenting in there, too. These are, like, writers. These are economists. These are very well-schooled people. If you read how questions are posed or even statements are made in just the commentary, very smart people read that guy's shit. He's one of the only guys. There's only like a small list of people you can trust out there with this data. He's one of them. There's others, but he's one of them. Yeah, well, no, hold on. So they are cooking at home, but if you watch the data on people how they spend their money right now, they are very smart. Like, well, they're very smart, and there's like prices are coming down on some things, so they're not spending as much. So like people are like, oh, they're spending less money at the gas station, but it's like, no, gas was coming down, believe it or not, and the price of goods in the gas station are coming down, so they don't have to spend as much at the gas station, believe it or not, the corner store, convenience store. There's a lot of bad fucking takes on data out there right now. Once you start figuring this shit out, you're like, oh my god. There's so much bullshit. There's like, it's layered so fucking thick, either from stupidity or selling something or just no understanding or grasp of concept. It could just be like, I don't know what I'm talking about. Exactly. We will never have a liquidity problem. Ever. And debt is always a good fucking thing. Exactly, Nostradamus. The debt keeps the world running. Fucking Deficits are good. And we have growth. We have more people. We have more consumption. We make more loaves of bread than we've ever fucking made. People are like, we need to go back to this, that. I'm like, no, you're out of your mind. Let's see if we get a rip here. We're almost there. If we're gonna rip, it's here. Right around 350, 352. We always blast down at this time too, so be careful. You guys really start reading this guy. Like, really start focusing. In all honesty, right? You'll see FinTwit garbage in there. It's hilarious.
The market on close imbalance data.
Like, it's hilarious. Like, people from FinTwit will literally go in there and they will regurgitate some shit that like a fucking 100,000 follow accounts was spinning. And they'll just be like, bam, 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 bam. And he just comes out, he just goes, here's the real data. Stop regurgitating that BS in my blog. That's exactly how he says it. Read the goddamn fucking article. That's a thing that he does, an acronym. He's like, first of all, read the goddamn fucking article. Or he'll drag out an old article if you can't remember it or find it. It's hard to find his shit on his site after like a month or so. You have to like Google search for his old articles and like dig through it. But you got to start following this guy because this fucking guy is like dispelling bullshit everywhere.
Sell side 333 million, Nasdaq 100 sell side 88 million, Dow 30 sell side 1.2 million, and Mag 7 buy side 64.9 million.
Here, I just posted his most recent article. I posted a link to the article. Hiring in the private sector surges. Not only does it surge, but they can't find people. I do agree with I do find it funny when you've got people saying get rid of the Department of Education. And what's his name? The one guy that's like, well, Americans are dumb. And then you had the new leader of the Department of Education not knowing that U.S. used to be first in math. Now you want to dismantle Harvard. Okay. All right. And yet we can't find enough educated people to do the work we want to do. Oh, God. My brain hurts with some of this stuff. Brain is hurting. I just pinned it to my profile on Twitter. I wrote, yes, our friend Wolf shitting on FinTwit Zeitgeist yet again. Perfect timing considering the data coming out tomorrow and Friday. Always read the comments and don't hesitate to regurgitate what you read from high follow accounts in his blog. Don't hesitate. Please do it. Go over and read his blog and then go into one of his comments and just be like, slam down your favorite high follow FinTwit accounts, what they have to say on this stuff. See what he has to say about it. Because I always get a great shit and giggle after what he has to say. Grab my popcorn and my triple bourbon. Like, here we go. It's probably the best comedy anywhere. It really is. No, it's educated. False. False, 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 false. The jobs are out there. The jobs are there. Dude, the reports state it. The literal PCE report had reports from companies stating we cannot find people that are qualified for the jobs that we have. Literally, there are not enough available or willing to work. That's what the data says. I'm telling you. Please believe me, begging you. If you don't believe me, you can go read it. Here, you want the article? I'll show you. I'll read it to you. I'll read it to you right now. I'll read it to you so you have it. You guys would be shocked at what you and I are fed every day. You would be shocked, and it's not your fault. It's our fault. It really truly is. Like no, wait a minute. I'm miswording that. It's ultimately our fault to know. It's not our fault what we're fucking fed. Like, I'm telling you, the shit, no one's reading the actual data. Like, nobody is. Everyone today wants fucking to be told what it means in fucking 140 characters. It's just not the goddamn truth. Like, it's not even like, forget like social media and the news. Like, no one's reading the fucking, like, we pay for this. We pay for this fucking data. And we just take people's words for it rather than reading it. Like, it's right there. It's not like it's not do my own research either. You get what I'm saying? Like, you're actually going to the data and saying it's right here in front of me. And you'll be shocked. You'll be shocked. You'll be like, why the fuck did they write this? When they didn't give full context. One of the biggest things, one of the most easily manipulated things, anyone will tell you this, is probability and statistics. Or not probably, but statistics. Like, statistics can be manipulated so easy, and data, like, reinterpreted without context. It is fucking wild to see in our financial markets how pervasive it is. And then when you read this shit for what it is, like the actual stuff, you'll start to understand when they're talking, like the source. So like when you go to like a Fed meeting and you hear Jerome speaking, you'll go, oh, I know what he's saying now. Now I understand what that guy is saying. Now I understand the change in verbiage. Now I understand when he says persistent. Why does he keep harping on persistent? Like, I get it now. I get why he's saying this and that and this and that. I'm not, dude, when that veil comes off, you're going to go, wow. You're going to go, they're not lying to me. I just didn't understand what they were saying. And I'm reading the data now, and now it all makes sense. But what's happening is between the data and the people that are giving it to you, you've got like a layer. You got like a layer of Bloomberg and like fucking some guy on fucking FinTwit and fucking like some hustler selling you fucking $600 a month reports. Like, it's so fucking bizarre. And then you're just like, holy shit. They're all goddamn grifted and lied, or they don't know what the fuck they're talking about. It's one or the other. I don't know which one it is. And you can't blame people like me and you for consuming it. Like, if I read Bloomberg or watch CNBC, I should be able to trust that, shouldn't I? You should too, right? We should be able to trust that information, but we can't. You got to literally go to the Fed and look it up yourself. You can literally go to the fucking Fed, right, and look at the recession indicator and how far away from it we are. Like, we're so fucking far away from the recession, it's not even funny. So when you hear someone say, we're going to go into recession, I'm like, what are you talking about? You're out of your mind. No data supports that. Not yet. See, same action as yesterday. See the same action right here? Same shit as yesterday. I gotta get different futures contracts right now, bro. Same price action as yesterday, no different. Here's that lower one that I want, that 94. I don't know if I can get it here. I'm begging you. If you're watching the show right now, I'm begging you to start watching that shit. I'm begging you because I don't want to be alone here. I really don't. Just keep reading it. And like after a month, come back and be like, you're not lying, Cap. And you're like, you'll forever be changed. It'll change your life forever. It really will. Like, you'll wake up, boom. You'll start saying that they're just fucking spewing garbage at us. That's all they're doing. This isn't like conspiracy theory shit. This is like literal data, easy to follow. And there's a guy telling you this is what the data is. This is what it all means. Like, there was like just this, one of his last articles on the PCE article. A guy comments. I'm going to explain this. Maybe read this to you. This discussion, how it went. Listen to this discussion. This is a discussion, the PCE article. Let me just read this to you. It's so fucking bizarre. Hold on here. Like, let me read this to you guys really quick. Let me show you guys really quick how fucking insane the shit is. And this doesn't mean you have to be that smart. You don't, like, you know, you like try to make your day as easy as possible. You don't need to be the smartest guy in the room. You have no need to be that. You got a guy over here doing it for you. This guy right here. This guy right here is doing it for you. This guy right here, Zeitgeist. Right? So you're talking about the PCE and what it includes and what it doesn't include, where people are spending their money. This guy writes, I did a 10-day vacation 2 weeks ago, and the hotels I stay are pretty much empty. Maybe high prices at those places finally sank in for travelers. Even the freeways were pretty empty. Of course, we are now entering summer vacation period as schools are out for summer, and possibly recreation stuff will snap back. And this guy's quoting recreation spend in the PCE, but it's not in there. It's not the recreation he thinks it is. He thinks that the recreation in PCE includes lodging and airfare and travel, and it doesn't. So Wolf responds, the Recreation Services Index does not include lodging and airfares. You know what I'm saying? So like whoever this guy is, probably Anthony, is seeing incidental or He's seeing what's called shit. Like, this is my experience, right? And not only that, it's before travel season too, right? But this data doesn't even include that stuff. So this guy's trying to correlate something that has nothing to fucking do with this PCE at all. Zero. Nada. No. Nothing. And he's like, sorry, bro. It includes cable, satellite services, broadband, amusement parks, campgrounds. Yeah. That sudden historic month-to-month plunge had nothing to do with reality. It's in the nature of the PC index, and we'll snap back. Just look at the chart. To respond to your comment, I just made reservations at a bunch of hotels in California, and prices out of the wazoo. Availability was limited. Lots of dates. Places looked booked. So maybe not as bad as last year, from which was utter mayhem, but still bad from a traveler's point of view. Memorial Day travel was a record breaker. So there isn't any kind of historic collapse going on. Like, you guys got to read this shit. Like, you got to. I'm begging you. It will open your eyes. It will literally open your eyes to the bullshit that we're consuming. Me too. Dude, I went into one of his articles this week, and I asked a question of him. I was like, hey, man. I was like, Wolf, I know that we're just looking at goods and not services right now. I was like, I know that some of the service imbalances are not really big imbalances, but I was listening to a podcaster. I was like, and he was harping on services, how there's no trade imbalance. And then Wolf's like, no, man, like the services and goods services are this big and goods are that big. And the imbalance is so outweighed in goods that services doesn't help. So I was like, I was listening to a fucking podcaster that has 1 million fucking followers on YouTube, 1 million fucking followers. And I'm like, then why isn't this main news? And why isn't this in the news right now? This guy's like harping on these like service, like Switzerland has a no trade imbalance with us with services, right? So why are they being tariffed? So this guy's like harping on this shit in this podcast, and I'm like, all of this sounds right, but this one part doesn't sound right. And why is this not front and fucking center? So I went back to Wolf and asked him, hey, man, like, I'm listening to this fucking guy with 1 million followers. He's got fucking 500,000 fucking views on this fucking podcast. That means that, like, all of us are consuming this shit. And we're being told something that's not fucking true. And it matters. It matters when you're trading the stock market. It matters because you know how many times we sit here and we go, I'm going to short this shit to the depths of hell because it's going to crash? And it doesn't. Again and again and again and again. And then the data comes out later. They go, oopsie, everything was fine. Right? And so we're reading like late news that resolves. Think about that. Well, retail's not buying. And then all of a sudden yesterday, I'm watching the calls being rolled to 6,100, and I'm going, they're buying. And then today, a day late, they're like, oh, yep, they're buying. It's stale information. So it's either stale, it's sizzle, it's I don't know, it's intentional, I don't know. But you want to get that information before anybody else has it. Right? And you want to get the correct information, so no matter what anyone's telling you, like, those motherfuckers don't know what they're talking about. It's kind of like looking at the case Schiller. It's 3 months late. You have more current data. Does it matter today? No. But you know when someone's spinning bullshit, oh, case Schiller's going to be up, and you're like, I already know it's going to be down. And I don't need to tell anybody. I don't give a fuck what they think. You get what I'm saying? So you know before the bullshit in the actual report. And if you know that before you enter it, you got an edge. You have a fucking edge. So if you know before we get to report, right? So let's say we got NFP, right? And you got the unrealized vol. Doom, 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 doom. Doom, 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 doom. Oh, and if it's this, it's going to be real way down there. And you're like, I already got the numbers, man. I've been tracking that shit for like weeks and months, man. I already know. The reaction is going to be knee jerk, and then we're going to rip faces off. Or the data's really bad, we're going to go down. right? We're going to get realized volatility. So you want to try to know this stuff before we get there and like clear your mind of a lot of the people that are reporting this shit because you don't know their intention. It doesn't sell a newspaper to be like, everything's great in the employments, right? How many views did you get in that article, Jim Bob? It looks like your viewership's gone down. You gotta put some doom in there, man. You know, you want people to freak out, man. You go on Reddit, man, they're all talking about fucking no jobs. That doesn't sell newspapers. You know what I mean? But you, as a trader, need to know that shit. And if you don't have the time or the education to know it, you got to find someone that can do it for you that you can trust. They're very rare. And I don't do that. I've got no relationship with this guy. Zero. This guy has not been fucking wrong once. I haven't seen him wrong once. Not one time. You guys have a great day. I'll see all of you tomorrow. I'm going to get a new blazer tonight. I'm getting fat. I don't fit in my fucking blazers. It's been cold here longer than it should be. I'll see all of you tomorrow. Please, I'm begging you guys. Start reading that shit. Like, even if you don't understand it, just read it every day. Every time it puts an article, I'll read it. You read it for a month, or 2 months. Do the work. Read this shit over and over and over and over. And then start paying attention to the zeitgeist and the bullshit. You're like, these fucking people, they're out of their minds. They don't know what they're talking about. I'll talk to you